The Friday session almost upon us. We are starting with an expectation we'll see modest rises, a flat session probably more likely as we get going here in Europe. That's what the early indications are. So let's get into it. It's time for the opening trade. FTSE 100 starts absolutely flat as anticipated. We have seen the oil stocks over the last few days coming down. We've seen some of the mining stocks going a little bit higher. The CAC 40 has been driven by the luxury names. We'll see how that opens this morning. We've got some single stock stories we need to watch there with the Moncler news. But nevertheless, the overall story has been one of luxury names rising this week. So the FTSE 100 is struggling to make headway. The Stock 600 absolutely flat at this point in time. We'll see how long it takes for the CAC to open. There you go, opening up a little higher than most this morning, up by 0.3%. It has been the outperformer after being so long the underperformer. I would fold in French politics here. Just think about what is happening on the French political story and whether that could upset this positivity that surrounds the CAC 40 right now. We'll wait for the DAX. We'll see how long it takes to get moving. The SMI as well. In the meantime, Anna, what's happening below the surface?
Yeah, below the surface, if you look at the sectors, it's not to the extent of yesterday, but some of the same sectors are doing well as they did yesterday. So China bringing the week to a strong close. European equity markets, as you say, a little more sluggish, but that hasn't stopped consumer products and services, which is the home of the luxury sector, from being the best performing sector this morning. And so we see that sector up 1.5%. Now that's that's nowhere near the more than 6% gain we saw for the sector yesterday, but it's still a decent performance. And basic resources also on the rise in terms of those stocks this morning, so reflecting the higher copper price, higher iron ore prices, all of that playing out quite positively. And technology up again, up 0.4%. So it seems as if a few of the themes of the week are continuing to play out pretty well. To the downside, we see healthcare, we see banks, but the moves today much more muted than earlier on this week. Then,
can I just throw something else into the mix, which is what is happening with Spanish inflation data, which is hitting the tape right now. We've just seen some very weak French numbers, and the Spanish are not to be left out. We are seeing CPI month on month come in at negative 0.6. That's down from flat last time round, and the headline number, the CPI number, comes in at 1.5. That again significantly weaker than 2.3%. I think they were looking at 1.8, 1.9 of Bloomberg Economics. The expectation is that number will now re-accelerate. There's some base effects caused by some VAT changes to energy prices that are going to drop out of that. So you could see a re-acceleration from here. But nevertheless, two prints this morning already signalling maybe that the ECB needs to get into gear.
Yeah, absolutely. So expectations have been building that we will see a cut sooner than expected from the ECB. And, there's just less in the way of them doing that as we see these inflation prints coming in below expectations. Back to the stock story, Guy, and we continue to see luxury stocks doing pretty well. That's the broader China theme, but there's also some other news in that space as well. I can see that Ferragamo is doing very nicely this morning. That stock up as much as 5% at the start of trading. We have LVMH trading higher, up by 2.7%, and they, of course, have taken a stake in Moncler, and I don't see an opening price on Moncler just yet, so we continue to watch that sector. We have a downward move in Forvia, which is the auto parts maker. That stock's down by 1.3% on the back of reduced guidance from that company.
LVMH has had quite the week. 23rd, 24th, 25th, 26th. Now we're into the 27th. Over those sessions, I think we're up by 18.31%.
Is it in positive for the year yet, though? I think it's still down, isn't it? Year to date, it's down by 4.6%. So it's pulled its way quite a long way back this week with those gains.
A roller coaster ride from Bernard Arnault. The Chinese stock story very much front and centre this morning, and how is it folding into the European story? I think you can look at this from two different angles, one of which is what is happening with European stocks, which I think is interesting. The other one is the economic story. We've just seen some very weak inflation data coming through, which will maybe encourage the ECB to cut rates, but at the same time, if we do see Chinese stimulus, is that something that's going to feed through back into the manufacturing sector in Europe and change the narrative there? So how do you play the China story? How should you be thinking about this? Yesterday, that was a question we asked the BlackRock's Helen Jewell. This is her take.
In terms of China directly, yes, I think there is a place for that in a global portfolio. And this is something we've seen in the last month or so. We have seen a bit of a rally in China. And today is a real reminder that with China, there is always a floor level to those stocks and those names. There will always be some stimulus coming through.
Helen Jewell joining us from BlackRock this time yesterday, talking about that impact that we are seeing from the Chinese story into the European story. Andrew Parry, Head of Investments at J. O. Hambro Capital Management and Impacting Investing Boutique. Regnan joining us now.
Good morning.
Nice to see you. Good morning.
Good to be back.
Yeah, I haven't seen you for a while. Andrew, what do you make of the China story? How do you factor that into your thinking? Does this significant stimulus that we've seen announced this week change the narrative both for China, Asia and Europe?
I think it is quite profound. I think the timing of it's interesting, and the sheer scale and coordination of it really means that I think this is something that's going to have legs. So we might still see it as a cyclical recovery in the China story, not a permanent change in the direction of some of the big forces at work in China, but it's going to be one we can trade for some time. You just talked about LVMH.
Yep.
Still down on the year, having been up nearly 20% in a week. What it's forcing people to do is rethink about their positioning. One characteristic of this year is everybody tends to get crowded into the same trades. So when perceptions change, even if they're on the margin, it can have quite profound impact on where investors direct their capital.
Does this make Europe a better investment? Should I be thinking more about what is happening with my investment story? A lot of people are still underweight Europe. The spread with the American market remains substantial. China stimulates and it sticks. Does that start to close some of those gaps?
I think it does. I think what we're going to see from China is a recalibration of fears of deflation being exported to maybe rethinking about inflation. You know, you mentioned inflation at the moment. It's been very well behaved. Inflation is at a relatively low. It's got close to central bank targets. You said it might encourage the ECB to cut further. But, you know, if we're going to get more stimulus from China, you know, there's been a real shock and awe. Fiscal, monetary policy changes. We've had the Fed cut by 50 bips. We have the ECB easing. Even the Bank of England is begrudgingly joining the party. We've actually got a lot of monetary stimulus coming in. Maybe this is the point where the story on inflation will be tested. We've had a really good run.
Yep.
But is it going to stick? You know, it's not guaranteed that inflation in 12 months' time is going to be as well behaved.
Right, yes. So let me pick up on that part of the conversation and think about the European story and the ECB. We've gone from pricing in the chance of a cut at the next meeting, which is next month. It's gone from 60% to 70% in quite a short space of time. And we got the data out of France today on inflation coming in below estimates. The Spanish data also coming in below estimates. Expectations that the number next week for the Eurozone as a whole comes in below 2%, below that target. Feels like a long time since we've talked about inflation numbers that low, Andrew. So how much is there still to trade on that, I suppose? Or how much do we go on to thinking about whether it stays that way?
I think the inflation trading it on the downside, I think that might be over for now. I think that this is the point I make about this coordinated set of action on interest rates. I think it's seasonally, it's a time when we begin to get more optimistic about markets, economies. We've had a real messy summer, haven't we? People have been rotating from tech back into tech, thinking about what's coming next. You know, industrial metals have been out of favour. So if China actually does manage to stimulate more demand, even it doesn't have to be a huge boom. It's just in the absence of a negative can actually change perceptions. And so that's why I think inflation is going to bump, at best, is going to bump along where we are. Yes. But it might actually surprise to the upside, because policymakers might want that with all this government debt around.
Right, and does it depend on whether China turns the corner on its inflation numbers? Because the risks around deflation and the focus on deflation in China has been around for a while, part of the story for a while, and that's been at a time when Western governments or Western monetary policy authorities have wanted inflation to weaken. They might not want to see that anymore. So how much of an impulse do we get from the inflation story out of China, do you think?
Well, I think it's quite fashionable to say China is going through the Japanification. Its economy is sort of moribund. There's nothing much they can do to recover. But if you look back, we've been asking as investors for a stimulus package from China. Because of the politics there, it doesn't happen in the way that it would in the West. It's very binary. They can change their mind overnight. And literally, they have. So that's why I think it's far more profound what we've seen this week. In fact, it's easy to say that the markets have soared. But actually, I think it could lead to quite a significant change and a reorientation to more nominal GDP plays over the next 3 to 6 months as we run into the end of the year.
Our equity markets, if inflation starts to stabilise and potentially tick a little bit higher, how are equity markets going to react to that? In theory, that should be good for the top line. So you're going to see top line moving quite nicely. That should be good, in theory, for the earnings story. But nevertheless, equity markets more broadly have been reacting quite strongly also to the thought that rates are going to come down and down quite significantly. If Jay Powell turns out to be Arthur Burns and is forced to raise rates potentially fairly soon, how do equity market investors react to that?
I think it's a bit premature to start talking about raising rates.
Do you?
I think when I say that the inflation story might be hitting its low point, it doesn't mean that you're immediately going to get an upward change in direction in the rate structure. I think you'd probably get more rate cuts, and that's why I think inflation could next year be not as benign as it is this year. But to your question about what do investors do, I think investors are already changing their orientation. If we'd been talking 6 months ago, we'd been talking about this very narrow market globally, led by a small handful of stocks. That's hegemony of the big tech stocks is broken. We're now getting greater breadth in the markets, and I do think it will begin to be quite healthy for markets. It might mean limit the top line if we begin to see a rotation from mega cap into the broader economy, into mid cap.
Do you think the index comes down on that?
No, I don't think it actually comes down. I think it just doesn't. We get more stocks going up, but because they're not the mega cap stocks, or not predominantly the mega caps, it might just limit some of it. But as a stock picker, as an investor, I'm going to be enthusiastic about that. It gives me a great range of opportunities. And there are a lot of great companies out there trading at really good valuations that have been ignored for a long time. And in a nominal GDP growth world, there's a lot of sort of more industrials companies that I think will come back into favour.
So what are the best themes to play then, Andrew, as we go towards the end of the year, into the last few months of the year? What will be the best themes to play? Because if the tech theme was so dominant, as you say, up until the middle part of the year, now we've seen a little bit of broadening. Is it the themes we've talked about for a while around electrification, that sort of thing, or what are you thinking of?
Well, those themes have been doing very well. If you look at Siemens Energy, I think has outperformed NVIDIA this year to date. So we've already got some of those themes beginning to come back into favour, and that's part of my thesis about a broadening of the market participation. I think there's lots of great names in the industrials. The consumer cyclical names have been really beaten up. We've seen the response in the luxury names, but more broadly, I think we've got quite pessimistic about the strength of the consumer. The consumer is not in a bad place. When we look at balance sheets, corporate balance sheets are pretty healthy. Consumer balance sheets, particularly here in the UK, where we like to do ourselves down, actually, it's not a bad story. So maybe the UK comes back into fashion. We've certainly got some great companies trading at some very low valuations. So I think it's just this concept of it's not just about a handful of stocks.
Yes.
You can look more broadly.
And bigger picture, though, linking to what you just said there, if companies are okay and individuals are okay in terms of their balance sheets and it's governments that are not, what does that do to your investment thesis, to your outlook?
Well, that's the big Achilles heel of the story, is the indebtedness of countries. That's why I think we can't be complacent on the outlook for inflation, because they need the stimulus to get the economic growth going. And with large budget deficits, that will mean they're probably going to be more likely to err on easing, even if inflation stops behaving as well as Guy was talking about when he was challenging me about rising interest rates. So they're not going to rush to do that because of indebtedness. So that's why I think we could see over the next 12, 18 months, maybe a little bit more inflation than people think, just because it's in the interest of governments. They're not going to have their Arthur Burns moment and raise rates prematurely, that's for sure.
Andrew, nice to see you. Thank you very much indeed for stopping by to see us. Andrew Parry, Head of Investments at J.O. Hambro Capital Management. Let's talk about what is happening with the Core 6 this morning, figure out what this story looks like. You have seen luxury names very much on the front foot, and that continues. As you can see, LVMH is up very strongly, up by over 3%. But interesting to see Novo softening up as significantly as it is this morning. You're also seeing weakness in Schneider as well. That stock down by 2.5%. ASML up. There's interest in what is happening in the chip space this morning in the form of ARM potentially talking to Intel. That conversation rebuffed apparently, but there are things moving in that space. It'll be interesting to see how Intel opens a little bit later on today. Let's get some individual stock story moves with Joe Easton. Back over to you.
So we've got some wild moves in Moncler in the opening, trading over in Milan today. Now the stock jumped around 15% at the open. It has now gone into a trading halt, up at 12%. Actually ticking again now. It looks like that halt has released. But the stock's soaring as LVMH takes that stake via an investment in an investment vehicle owned by the chairman, so really getting a boost on that one. And the moves higher in luxury, really incredible. Once again, still rallying. Bear in mind, LVMH up close to 10% yesterday, up another 3% now on a weekly basis. It is the best week for that stock since around 2001, according to Bloomberg data. More than 20 years in terms of the weekly move. Bearing in mind in the context of the big declines that we've seen since around March. But still, a very, very impressive week for the luxury space today. Then the other sector which had a bit of a negative news out today, it was the auto space. Now, Forvia was the one that put out a statement this morning, but Hella yesterday, after the close of trading, these companies are interlinked via a 2022 deal. Now, Hella put out a warning after the close in Germany, so that stock is coming down, but it does look like Forvia and some of the other peers potentially priced in the negativity around the strikes in the US and around the slowdown in EVs already. So those stocks actually holding up okay. We've also got news from Renault saying that they are selling more shares in Nissan, and this is actually going to boost their net income according to the company. So that is a positive one over in autos. But it looks like Hella taking the brunt of that warning on the auto space today. Then we'll flip over and have a look at some of the deals news. So Eni looking to potentially sell a second stake of Eni Live. Now, this is one of their businesses that does work in renewables. They recently sold a big $2 billion stake, but there is a report out from Reuters overnight saying they're looking at selling another chunk. And Prudential, the London-listed Hong Kong-focused insurer, doing a pact with an Indonesian bank, according to a statement overnight. So that one gaining in London, a bit of extra M&A on the screens today. Then we'll flip over once again, and we do have a couple of interesting broker moves this morning. This one catching my eye. It's pretty much the favourite stock across the entire UK market, and even in Europe people love it, but it does get a downgrade. Rolls-Royce coming down to hold at Kepler today. A valuation call. It's up around 150% this year on the engine boost in aerospace. So they come down. No longer recommend buying. A bit of a reaction, down 0.8%. And finally, Goldman Sachs has a big note out on the Swedish and the rest of the Nordic banks. One firm they recommend selling is SEB. They say it's really exposed to declines in net interest income. So that one is one of the decliners over in Stockholm, down 0.9% today.
Joe, thanks very much. Joe Easton from our equities team with an update of some of those individual stock movers. Another stock that's had a really good time lately, and in fact, not a bad year, is Commerzbank. We will get to the conversation around the future of that bank shortly. A first encounter for the new Commerzbank CEO and her UniCredit rival. That is set to take place today. Commerzbank and UniCredit will talk. We look at what's at stake. That's next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Friday morning, 20 minutes into the session, 21 minutes into the session, and a more muted session is emerging after we've seen significant rallies on many fronts this week. You've seen it in the commodity space with the miners doing very well. You've certainly seen the luxury space on the front foot this morning. This, as we've priced in this China story, it has felt like an incredible day every day this week as we've kind of digested and dealt with that China story in a little bit more detail. This morning, though, as I say, a little bit more muted. We're up by 0.2% across most of the main markets. We'll come back to the inflation story a little bit later, but inflation incredibly weak out of both France and Spain. If that is continued, maybe the pressure really mounts on the ECB to deliver a rate cut in October. Let's turn back to one of the other stories that we've been watching throughout this week, and that has been what has been happening with Commerzbank and UniCredit. Commerzbank's management set to meet with UniCredit today, the first encounter since the Italian bank started building a major stake in the German lender earlier this month. Let's talk about what we should expect from this meeting. Ollie Crook joins us out of Berlin. So it's been a roller coaster week for both banks this week, particularly for Commerzbank. Bettina Orlopp out having to make statements about how she is going to develop this business and push it forward and why it should remain a standalone institution. Where do we stand at the end of this week? Where do we start this meeting between these two institutions?
Yeah, Guy, and just so much has happened in this last week. Let's just remind everybody that 21% stake emerged only on Monday, right? And then there was that Bank of America conference where basically you had this sort of odd scenario where you had both Andrea Orcel one day and then the next day Bettina Orlopp laying out kind of their plans for the bank going forward. And what Bettina Orlopp put out was basically an increase for profitability. She wants to boost investor payouts. And this is all part of the case that she has to make now for shareholders who ultimately will have a big say in what is the future of this bank, whether it continues as a standalone or it goes as potentially part of UniCredit. The board has backed her plan and the independence of the bank unanimously yesterday. That is what has emerged, and that's what we going into that meeting today with the management of Commerzbank and UniCredit for the first time meeting face-to-face, or not face-to-face, I should say virtually, but speaking this morning. We do not know if Orlopp and Orcel will both be in this meeting, but this is the beginning of potentially many conversations that will govern the fate of this bank. We should also say that we've heard from more Italian officials who have speaking in favor of this. We know the Germans are against it. They still have that 12%. What will they do with that? I should also tell you guys, by the way, that outside of this office right now, in front of the Brandenburg Gate, there are two flags flying right now. It is the German flag and the Italian flag, because there is a state visit by the president of Italy here, Mattarella, who will meet with Schultz later today. I wonder if this will come up.
That's a nice little detail. Thanks for that, Ollie. Does the presence of the flags make a deal more likely? What sense do we get as we get towards the end of the week as to whether this deal actually happens? By which I mean, of course, we know they have a stake already, but some kind of fuller takeover of Commerzbank.
I mean, listen, Anna, there's been a lot of shareholders have been sort of reticent to speak, but if just imagine that you're a Commerzbank shareholder and you're potentially a long-suffering one. I mean, this is the rally you've got in the last 2 weeks. We're talking about 30% since this whole sort of discussion began to happen, and that's sort of where we're resting right now. That is basically the UniCredit premium in the shares right now, and that is something that as a shareholder, you can't really ignore. These are the highest these shares have been since 2011. If you look at the sort of profitability and you look at the Orchel track record, again, as an investor trying to appraise where this bank is going to go, you look at the return on common equity. We've talked about this before. It's not even close in terms of what Orchel has delivered and what Commerzbank has delivered historically. In terms of the odds of an actual deal coming through, we have got from Citi now, the analysts there saying that they see it actually as a 70% chance that this is going to go through at a 10% premium. So as you hear sort of more analyst commentary about that, it's going to heat up substantially. I think the one last question is, how far is the German government willing to go in order to make this deal not happen potentially? There's still a large shareholder, though, but not even close to any kind of majority. The question is, could they do something else? And that's going to be the question that we're going to watch over the next few days.
In terms of what could happen were this to be successful, how will UniCredit treat Commerzbank? What do you think the model could look like? And is Vereinsbank being seen as the template in Germany as to what could be delivered here?
I think that is definitely the fear that is seen by many people, certainly by the unions, because there were a lot of jobs that went after that, right? And that is the point that many are making. And that's why also the unions themselves would like UniCredit, or I should say Commerzbank, to be declared critical infrastructure, to maybe give it a sort of enshrine it and protect it a little bit more in a way that they couldn't do before. The question is that given how politically sensitive this is there a greater impetus if this deal were to go through for Orchel, again, to maybe take a little bit more of a tender approach, at least in the beginning? But again, Guy, we talked about this a little bit yesterday. I also think that if potentially Commerzbank can stay as a standalone, now it has the cover to make a lot of difficult decisions, but maybe not going quite as far as a UniCredit might.
Ollie, thank you very much. Bloomberg's Oliver Crook there. I'm reminded of our conversation with Jean-Claude Trichet, former, of course, president of the ECB yesterday. He was suggesting that Germany needs to have a wake-up call around its banking sector, given the experience he has with dealing with the banking sector across Europe. I thought it was interesting to get his thoughts. He thought modernisation of the structure was important. The main problem is simple. They have a lot of banks that are not too keen on making profit, is what he said to this programme. We continue to watch the German banking scene with that in mind. Coming up, as oil has been declining of late. I saw it was ticking up this morning. No, now it's down again, so it's a little volatile in this morning's session. We'll get the big picture, though, from Marcus Garvey from Macquarie. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure, to have, let's call it a structured solution, we think that there's a lot of opportunity with those businesses.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Welcome back. This is the opening trade. 30 minutes into Friday's session. We see modest gains by this week's standards for European equity markets. This week up 0.1% on some of the major markets this morning. The luxury sector, of course, has done really well through this week on the back of that China stimulus story. Today we have a new element to that story, a sort of a sidebar conversation, if you like, but LVMH taking a stake in Moncler. That is seen as something that, that is something that's driving the share price of Moncler, as you might expect. It's up by 8.6%. It's halted once again, so it's sort of been in and out of trading halts this morning. We continue to watch that sector. Let's turn our attention, though, to matters geopolitical coming to us from New York. France's new foreign minister has called for more effort from G7 countries to build a solution to the conflict between Israel and Hezbollah. Jean-Noël Barrot spoke with Bloomberg's Anne-Marie Jourdain at the United Nations in New York.
The situation in the region in southern Lebanon is not acceptable. There have been too many casualties on both sides. Civils, children killed by Israeli strikes, and Hezbollah hitting densely populated areas in Israel. That's the reason why France called for an emergency meeting of the Security Council of the UN that convened yesterday night. And that's also the reason why France, alongside the US, conducted a negotiation effort alongside other G7 countries and members of the international community to try and build a solution that we think would be acceptable by the two parties, which is basically a 3-week ceasefire that would allow for both parties to move towards a more durable cessation of hostilities.
But Netanyahu is rejecting that. And so far, the evidence shows that Hezbollah has no interest in this. The reports out of Israel right now is that Netanyahu actually backtracked. Is that accurate?
So you're saying that Hezbollah and Israel don't have an interest in this truce or in this ceasefire. I believe another way. I think that on both sides there have been displaced populations, and I think it's in the interest of the Israeli government, but also for Lebanon, to let the thousands, tens of thousands of people that have had to leave their home to go back to their home and to their places. And this is not possible until there is a ceasefire along the blue line, namely the separation between Israel and Lebanon.
Did Israel say they were for it and then backtracked in their public remarks?
The statement that France, the US, and other partners released last night has been thought and negotiated in a way that we think can be acceptable for both parties. So this is a solution that is now on the table for both parties to seize.
That was the French Foreign Minister Jean-Noël Barrot speaking to our colleague Anne-Marie Hordern in New York. Israel's Prime Minister has vowed his military will continue its indefinite bombardment of Hezbollah targets in Lebanon. We heard them talking about that just there. Benjamin Netanyahu is set to address the United Nations General Assembly later today. So let's build on our coverage here with Bloomberg's managing editor for the Middle East and North Africa. Ona Rant joins us from Istanbul. Ona, tell us a little more about the global response here, about how global and regional powers are trying to stop this fighting.
Well, as the French minister was just quoted as saying, there has been a truce proposal by the U.S. President Joe Biden and his French counterpart Emmanuel Macron on Wednesday. They wanted to introduce a 3-week cessation of hostilities between Hezbollah in Lebanon and Israel on the other side. That they say will allow diplomacy to take the top priority and basically try and diffuse the tensions between the two countries. Those two countries, the U.S. and France, were supported in their effort by regional powers, including Qatar and Saudi Arabia. And the UAE, another key U.S. ally in the region, a key senior official from the country, Anwar Gargash, the advisor to the UAE president, came out yesterday and said basically the U.S. should do more to leverage its relationship with Israel to try and basically fundamentally force the country to take part in these truce discussions. And it's important to make note of the fact that these comments are not just individual comments from the country. It has been the common general expectation from regional powers since last October when the conflict began that the U.S. should do more, basically rein in Israel and force the country into a truce negotiation with both Hamas and Hezbollah at different times.
In terms of the expectation of what that truce would look like, we were originally talking about 3 weeks and fighting would come to an end for that period. Is that still what we're talking about here? Is that still the likely shape of this deal? Is anything changing in terms of the structure of what we're looking at?
No, the structure of it hasn't changed, but what I think is important to note is the fact that this proposed deal, since it was first unveiled on Wednesday evening, about 36 hours ago, has been met with great skepticism by parties that would have to take part in it, especially in Israel. We've seen that Benjamin Netanyahu basically said that he would not ease airstrikes on Hezbollah, and members of his own coalition government, including far-right members such as Amar Ben-Gvir, who happens to be a cabinet minister, said that they would have to consider basically pulling out of the coalition should the Israeli government take part in these in this proposed truce deal. On the other end of the political spectrum in Israel, also a leader of opposition, Naftali Bennett, who is a likely candidate to run against Netanyahu in the event of an election later this year or next, has also expressed great skepticism, basically saying that the time is not right for Israel to consider this truce proposal. So we're seeing great skepticism, if not pushback, on the side of Israel to this preliminary truce proposal unveiled by the U.S. and French.
Joining us out of Istanbul, Ona Rant, thank you very much indeed, our managing editor for the Middle East and North Africa. Commodities very much have been moved by this story and also by the China story this week. It's been a busy week in the space. Earlier, we spoke to Rio Tinto chair Dominic Barton about the volatility that he's seeing and the supply concerns that still exist.
Of course, we're going to be thoughtful in looking at where there are opportunities, but I'm saying as an industry, we're not going to inorganic our way out of the challenge because of this massive supply-demand gap. It's huge, and it's in at least 5 different commodity areas. And so that's going to need more mining. We're going to need to develop more projects, so we're just not going to be able to get it done.
We still don't have enough. Marcus Garvey, head of commodity strategy at Macquarie Group, joining us now this morning around the table. This week feels like it's been a bit of a game changer for the commodity space, and that change has come, yes, from the geopolitical story, but mainly from the stimulus story out of China. Have you thrown your numbers out of the window? Have you rethought what you're looking at in terms of the demand story? Is China going to hit its expected GDP targets? And what does that mean for metals like copper and iron?
I think you need to pass out what we've seen this week into the shorter-term dynamics around this year and then thinking about, well, what does this stimulus package as it emerges actually look like over, say, the next year plus? In terms of this year, our base case had actually already been that stimulus would be stepped up and that they would hit the target, so we're not immediately needing to change our demand numbers. But I think that was a different view to much the market held. And that if you look at what was priced into, say, Chinese equity markets or onshore commodity markets as a whole, they were very clearly showing that the market assumed that the government was effectively unwilling or unable to hit the growth targets. And there was a lot of short positioning in the commodities side of things. So that the short-term market response is, I think, justified in terms of a repricing of the likelihood that they'll hit that target. And I think it's fair to say that the price response has been more dramatic because I think the rhetoric has been more dramatic than we'd expected. So it's fair to say short-term price risks still on the upside, but we haven't at this stage changed our near-term demand numbers.
If this is consumer-focused, if they want to lift the consumer, why do industrial metals go up?
That's a very good question, actually. I'd say if you look at the composition of industrial metals demand in China this year versus, say, 5 years ago, if we go back to pre-COVID, particularly something like the steel market, we've seen a huge swing from that really being focused on construction and the long steel market, things like rebar that get talked about a lot, to now actually it's been dominated by flat steel, which is going into consumer durable goods, things like automotive sector, white goods, and so on. So it is relevant, but to your point, it's clearly less commodities intensive than if you go down the traditional, stimulus playbook, which would either be infrastructure or property. And I think the challenge there is, one, they're still saying they want to control property supply, so that doesn't suggest a massive building program is about to kick off. And the other thing is that they are actually already doing an infrastructure stimulus really focused on the build-out of renewables, so the extent to which they can step that up is challenging.
Can I ask about the sort of how this narrative, which is what we've been talking a lot about this week around China and the increased demand perhaps from China for the reasons that you point out, and some of that going into, even if it is consumer focused, linking that with some of the other thematics that we talk about when it comes to commodities like EVs and the fact we're going to need a lot more of certain metals to fuel that, but we're not selling quite as many EVs as we thought we were. So how does that story, in terms of supply and demand dynamics, play in?
Well, I think if you look at the battery materials specifically that are going into the EV sector, if you look 5 years forward, maybe cobalt, we could park it to the side, it's still probably going to be in a surplus, but something like lithium starts to look like it could get very tight, and you are going to need to add to the supply that's already projected to come. But in the near term, to your point, because demand has proved disappointing, and actually we've seen a very dramatic supply response already over the past 3 years, most of those battery material markets right now are clearly oversupplied, and that's been reflected in the price action we've seen. Lithium prices down sort of 80-odd% from their highs. It may be a critical mineral, but it doesn't mean it's a sort of one-way track higher in terms of the price action.
That's very interesting. So there's a short-term dynamic, and then there's the longer term. Let me ask you about oil, because then there's oil, and it didn't seem to be part of the same story as metals this week. We saw oil prices broadly in retreat. They continue, actually. They're down again now, down 0.2%, 71.47 on Brent. Clearly, there's a lot in the mix here, and some of the news lines from other media around Saudi Arabia seem to be what's driving things. What is in the driving seat for oil?
Well, I think whether or not there's a $100 price target, I think we'd be somewhat sceptical about that as an explicit thing to focus on. But if we step back and look at the underlying structural dynamic in the market, the real problem from Saudi Arabia's perspective is that at any price, not even close to their fiscal break-even, any price around where they might target it, you're going to be in a scenario where non-OPEC supply is going to grow faster than trend demand growth. And so while that's the case, it's very hard to find an equilibrium in the oil market. And really what you need to do to get to an equilibrium price, therefore, is to go down to a level where you can see those two supply-demand dynamics on an underlying basis match up. And our view for some time has been that that's probably in the 60s. That's not in the 70s, certainly not in the 80s, nowhere near 100. And in a sense, if we just, rather than looking at the specifics of that article, we just think about that broader backdrop, I think there's a bit of an acceptance in the market that that's the case. And that does mean structurally it's hard to be bullish on oil in terms of fundamental balances, unless, of course, you do get something like a meaningful supply disruption that changes the game.
Plug some geopolitics into that for me. What's geopolitics worth, do you think, at the moment? So 60 is the base case. What do you plug in on top of that?
I think at the moment, in terms of the geopolitical risk, it's getting very little risk premium in the market. But a big reason for that is fair is that because of the OPEC plus cuts, there's quite a lot of spare capacity. The evident risk, I think, if we look at how the market has priced out geopolitical risk premium since, for example, Russia's invasion of Ukraine didn't deliver any meaningful supply disruptions. What happened a year ago in the Middle East hasn't led to any subsequent supply disruptions yet. Means that is potentially underpriced from a shorter term perspective. Is that if you did lose a meaningful amount of supply in the short term, say 1 million, 2 million barrels a day, yes, there's spare capacity in the market, but would that actually tighten things up a lot in the short term? And could you get some fairly dramatic price action because the positioning is also very short? That is clearly an asymmetric risk in terms of shorter term dynamics.
What dollar number do you plug in?
In terms of current, what
do you
should
think
be or what is in?
Okay, both.
So I think what is in is probably very low single-digit dollars. To that point, what should be in, you could argue maybe like higher single digits, but the problem is how do you value that optionality? Because effectively you're putting that in as a risk premium, but it's decaying away unless something happens. And if you think about it in the sense of how like an option would price. So it's hard for the market to sort of sit there with a risk premium if nothing's happening over a period of time. We see this in other markets that trade with geopolitical risk premium like gold at times. You often, after an event, suddenly get a geopolitical risk premium, and then it bleeds out of the market if nothing actually materializes that changes the underlying conditions.
So you sort of react first and then work out the facts on the ground. What about, so from the dollar, what about the rate cut story and how supportive that is for the global growth narrative, and therefore how does that read across into what you're doing in commodities?
I mean, if we look at commodities performance during rate cutting cycles over, say, the last 50 years, since the early 1970s, the only actual example of them really rallying hard during the early part of a rate cutting cycle was 2007, and we obviously know how that ended up. Normally, markets sell off during a rate cutting cycle because the reason for the rate cuts is that growth is weakening.
Yeah, and that's not the case this time.
It's not the case, and so it is net supportive. And when we think about it, going back to the consumer globally rather than just in China, what's going to support global durable goods demand, particularly from the US? Rate cuts evidently help, so it is a net positive. But I think the prospect of it leading to a really strong surge in growth and a big demand pool for commodities is probably a bit too optimistic. But it's fine for commodities if the Fed doesn't deliver on what the market is pricing, if the reason for that is because growth has proved robust.
Yeah.
If actually they deliver as is priced or even more than that, but it's because growth has rolled over, that growth rollover would be more impactful for commodities than the Fed action in isolation.
Marcus, thank you very much. Thank you for coming to see us this Friday morning. We appreciate it. Marcus Garvey, Head of Commodities Strategy at Macquarie Group. Coming up on the programme, back to that luxury theme, LVMH is investing in the designer outdoor label Moncler. We'll bring you the details next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting in Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to the programme. 8:49 this Friday morning. We have a slightly more muted picture, though, for stocks. They're in the green, but they're not quite doing as well as they were earlier in the week, up by, well, not even 0.1% on the stock 600. So we're eking out some gains. US futures, though, are pointing a little bit lower after the week that has been pretty strong, in particular around the luxury sector here in Europe. So LVMH shares in the green this morning. This is the French luxury giant invests in the designer outdoor label Moncler in a deal that will give it a seat on the Italian company's board. Let's get some analysis. Andrea Felsted joins us from Bloomberg Opinion. Andrea, good to speak to you. The Moncler share price, very volatile this morning. It seems this might have been something of a surprise to a number of people. I mean, does it make sense to you, this taking a stake in Moncler?
I was surprised. It does make sense, but I was surprised. I didn't expect Moncler. I thought it might be watches or perhaps cosmetics, skincare. It does make sense. I don't think they're about to buy Moncler. But what it does mean is when Remo Ruffini does ever decide to sell, LVMH are in pole position and no one else can get in front of it. So that's obviously, you know, a strong position to be in. Also, Moncler's actually been an acquirer itself. It bought Stone Island a few years ago. Speculation it could be the next Italian luxury powerhouse. So if he wants to buy more, he's now got a really strong long-term partner to help him do that.
Is it a strange situation? You end up taking a seat on the board, you don't plan to buy maybe, or you don't think he's going to buy the whole thing. You get a good view of what others in the sector are doing.
Yes, also, a lot of these luxury groups take very long-term views. It's part of the reason they're so successful. They do take long-term views and they position. And, you know, you have these prize assets, and once they're gone, they're gone. You know, so Cartier went to Richemont. You know, you never get the chance probably to get that again. So Van Cleef went to Richemont. You know, now incredibly popular. Nobody else can get its hands on it. So you do get this positioning for these prize assets.
Why does Moncler need LVMH? Does it need LVMH?
It doesn't really. It's been doing very well on its own. But Remo Ruffini has tended to have a partner at this investment stake, this investment company level. It had the Rivetti family, which owns Stone Island. They recently exited. So he does like to have a partner here. And what better partner could you have than LVMH?
Luxury names have been under pressure for a while now. There's some opportunistic element to this, I'm sure. Has that door now closed? China stimulating the economy. This week, the gains have been epic.
I think it's still going to be quite rocket. I mean, they were clearly oversold last week. You know, there was a real element. You know, the analysts were sort of falling over themselves to downgrade. And if you're a long-term investor, you know, luxury is not going to go. I mean, we've got a few things. We've got China struggling. The US hasn't really come back. And we've got this sort of feeling almost like a luxury backlash. You know, they put up prices so much, it became out of reach of many people that had bought. So you have these things going on. But luxury is not going to go away. You know, I'm sure the Chinese, you know, consumer isn't going to stop shopping luxury. The US has got a fundamentally different relationship to luxury than it had a few years ago. But the European European names were seen as very sniffy, a bit snooty. Then you had LVMH by Tiffany. It put, you know, late Virgil Abloh at the head of Louis Vuitton, the creative director of Louis Vuitton menswear. Now got Pharrell Williams. That's really opened these brands up to a whole new customer base. When I went to New York a few years ago, I mean, you always had luxury shops in New York.
Yep.
I couldn't believe how many luxury stores there were. I couldn't believe I went in the winter, everybody had a Moncler coat on. You know, and they're opening stores not just in, you know, LA, New York. They've opened stores throughout the country. So that's a fundamentally different relationship to luxury. I don't think that's going to suddenly go away. People might not be buying now because they've bought a lot in the pandemic. You probably don't need it. You know, if you bought a design handbag a couple of years ago, you probably don't need one right now. You could probably wait another year or so to buy another one. So there is a bit of a trough.
Guys nodding.
But
I always believe that.
But I don't think luxury is fun to be. You know, many people around the world are getting richer. They buy, you know, luxury makes us feel good. It's status. It shows.
You've got to be really cold though.
Some of those jackets are really big. Andrea, what about, we often talk about the sort of different segments within luxury, and there's the super high end, and maybe some of them put up prices, isolated some of their previous audience a little bit. Then there's the sort of top end of the middle market, and that seemed to have been a place that was also struggling recently. Where are the pain points now?
I think that aspirational customer is still hurting. Obviously, the rate cuts in the States should ease that. That should help. Inflation coming down in the States, the Fed cut, that should help that aspirational customer, particularly in the US. You've got the super high-enders still spending. And jewellery as well. Jewellery's been a real bright spot for several reasons. They haven't put prices up as much as bags. Also, very few people buy their first luxury item. It tends to be a wallet or a handbag. You graduate to jewellery. You know, we've all been buying bags now for, say, like the last 10, 15 years. Designer bags have been a thing. So some consumers are ready to trade up to jewellery. So that's made jewellery quite resilient as well.
This feels like it's getting us set up for the weekend.
I really hope my wife's not watching. Andrea, thank you very much indeed. Andrea Felstead joining us from Bloomberg Opinion. This takes us perfectly actually on to something we're going to do from now on. We're going to look ahead to what is happening for the weekend. What is coming up this weekend is a big race down in Barcelona. So we've had the first couple, and we're talking about the Louis Vuitton Cup here. This is the prelude to the America's Cup, the Louis Vuitton America's Cup. Basically, you've got the two challengers that are racing. It is 1-1 at the moment between Ineos and Prada Pirelli. They're racing down there. These are spaceships when it comes to the yachting world. The next race is a day away and 4 hours away. It is 1-1 right now. If whoever wins this goes on to challenge Emirates for the America's Cup. These things are doing 50 knots, verging on 50 knots. Absolutely incredible. Go online, take a look at some of the video.
You could do the sport, Guy. I'll just reference the fact that there's a lot of luxury all over that, isn't there? There's Louis Vuitton, there's the Paris Fashion Week. But in terms of the America's Cup, if the actual sport isn't your thing, colleagues at Bloomberg, here at Bloomberg, have written a nice guide to Barcelona, which is an extremely busy city, and difficult to get away from the crowds. And, you know, we've seen a lot of American tourists coming to Europe this year. That's something that even some economists have been talking about. So anyway, nice non-touristy city guide to Barcelona on the Bloomberg terminal. It's
the end of the Paris Fashion Week as well, which is something else that is coming up. There's some really big shows coming out this week. I can't believe you haven't.
Film.
Megalopolis. Do you want to talk about this?
Big deal. Talk of Cannes, big budget, big stars. How will it go down at the box office? I suppose is one of the big questions.
Take the cannoli. Anyway. That's the Godfather reference. The opening trade is done. Have a great weekend, folks. The Pulse is up next. Enjoy the weekend. This is Bloomberg.
from the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Risk appetite across financial markets gets another boost from Beijing's latest stimulus measures and upbeat U.S. momentum, while China's stock market erases losses for the year. The yen surges as Japan's ruling party picks Shigeru Ishiba as its next leader, choosing a backer of the BOJ's policy path instead of a candidate who opposed rate hikes. Plus, Donald Trump says he'll meet with Volodymyr Zelensky today after stepping up his criticism of the Ukrainian president in recent days. We'll discuss support for Kyiv, an exclusive interview with the president of the European Bank for Reconstruction and Development. Now, first thing is first, a lot of the China news that we saw all week actually culminating today with a nice high, or at least on the week they've been gained. What that means for Europe is that we're seeing a little bit of a mixed picture. Now, some of the indices that are more skewed towards China may be doing a little bit better than some of the others. Again, some of these European markets actually hitting records. There's a bit more optimism, I guess, about the ECB and central bank easing and stimulus also from China. As I was saying, giving, for example, luxury a little bit of a lift. Now, if you look at cross-asset, two things we need to watch out for. A couple of data points out in the U.S. There's the Fed's preferred inflation indicator, and then we also have a snapshot a little bit later of consumer data. This may offer us further clues on what happens to rates going forward after some pretty strong revised data yesterday. S&P futures down 0.1%, and then yen is a big story because we now finally have a leader, and actually the yen on the back of that swinging to gains following these Japanese election results. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, to talk markets, we're joined by Natalia Lipikina, head of EMEA Equity Strategy at JP Morgan Private Bank, and Bloomberg's Justina Lee. Thank you for joining us. Happy Friday, TGIF. It's been a week and a half. When you look at some of the Chinese stimulus, I mean, it feels like, I don't know whether they're desperate, but certainly it feels like there's a lot out there. How much of a lift is this giving to European stocks?
Hi, Francine. Very nice to see you, and thanks for having me. We're definitely seeing quite a nice rally in the European market, even though we don't see a lot of upsides on the targets for the overall market. it definitely gives a boost to some of the European sectors, specifically luxuries. So we're seeing a very nice move in the luxury stocks this week, and we continue to like the sector. We think that this is a very much under-owned sector at this point. We think that valuation looks very attractive, and everyone just got very bearish on the sector. And we think that the Chinese stimulus that we have seen, monetary and fiscal, is definitely impacting the sentiment in Europe, but specifically the luxury sector.
Is there a danger, Justina, given all of this, that actually, they're stimulating the wrong side of the economy, and it smells maybe a little bit of desperation from Chinese policymakers?
I think that really is the question here. Like, for a lot of China skeptics, they're coming away from this with like two takeaways. I mean, one is that, are things actually even worse than we thought, and policymakers are getting a whiff of that? And second is like, are they doing anything to kind of address the structural challenges of the economy and maybe kind of try to fix weak consumer demand? And if you're kind of looking at it from that angle, then maybe this bazooka is not as impressive as it looks. But I think kind of given where Chinese kind of valuations are, I mean, if you're just kind of looking at it from the perspective of an investor, you can see why Chinese stocks have been rallying these past couple of days.
Yeah, and Natalia, it also goes back to the fact that actually valuations were quite low. So are there any industry groups apart from luxury that you like the most in Europe?
Absolutely. Industrials is one of the sectors that we're also quite positive, not just in Europe, but globally. We think it's the sector benefits from the ECB cuts, from the Fed cuts, but also if I think structurally, there are so many themes that this sector is exposed to. Data center build-up because of AI, number one. You have energy transition, we have infrastructure, security, so many thematics that the sector is just currently exposed to. And if I'm thinking the marginal dollar is no longer going to the low-cost geographies. So we're definitely seeing a lot of nearshoring and reshoring that is positively impacting the sector. But also AI. The power consumption in the next 3 years is likely to grow 10 times. So for that, you definitely need a lot of infrastructure build-up, especially companies that are exposed to data centers. We think they are in a very sweet spot right now.
And Natalia, are you confident that actually their fundamentals are strong enough? So we could see a lot of volatility because of geopolitics, because of domestic politics, also in the US and Europe over the next 6 months. But do you buy on these dips?
Absolutely. Absolutely, we're buying on any dip that we're likely to see. We think that the markets will be volatile in the next half a year, but in the next 12 months, we still see upsides to the European and the US market. And the reason for that is really the equities are in a Goldilocks right now because the central banks are cutting, but at the same time, the fundamentals remain very strong. Yes, the US economy is slowing, but it's still quite solid.
And Justina, is it still the Fed that's driving a lot of these gains? I know we're expecting, yesterday we saw a couple of data points being revised upwards for the U.S. economy, and then we have 2 data points today, including a leading indicator that the Fed looks at.
Yeah, I mean, it's been, like Natalia said, like a really glorious kind of Goldilocks here. And, it's kind of interesting that after the 50 basis point cut, it's not just that stocks rallied to highs. It's like, if you look at the internals of the market, I mean, it's kind of value stocks coming back and a lot of like steadier stocks kind of losing favor. And so it's like the risk appetite suddenly has been really supported by both this perception that the economy is still solid, but also that the Fed seems kind of keen to sort of get ahead of any weakness in the labor market. And so I think in that sense, people will be watching today's CPI numbers. I mean, kind of like, and also personal spending and personal kind of income growth. And that will kind of give you a sign on the strength of the U.S. consumer, as well as the fact that, inflation is still slowing as kind of the Fed has been seeing.
And Natalia, you also mentioned the marginal dollar. I mean, there are quite a lot of question marks on what the dollar does in the medium term. And that also impacts, I guess, your positions elsewhere in the world.
Yeah, we think that in the short term, we'll probably see a bit of a strengthening in the dollar, but the longer-term picture is we expect dollar to continue weakening given the cuts that we're seeing from the Fed and the ECB, and in general, the global central banks.
Natalia, when you say technology, I mean, apart from the data centers, is there any way of playing it to, chips or microchips? Or again, some of these stocks are also priced to perfection, and so I don't know whether it's a bit of a question mark going forward.
Data centers, absolutely semiconductors is a great way to be, but you have to be quite specific what you want to own within semiconductor. We've been quite positive on the equipment companies in Europe, in the United States, and in general, the companies within the whole value chain. But we'll also think about companies in the utility space, or the mining companies. Probably those are sectors that are usually a bit overlooked, or I would say underlooked, but we think that that is definitely a sectors that we would pay attention into.
Justine, I don't know if we've actually underestimated the weakness in China and whether we should have seen a bigger fall in some of the equity prices if the Chinese economy is really as bad as maybe policymakers think.
Yeah, I mean, I think that at this stage, a lot of people are buying the dip, and you're kind of seeing a bit of that frenzy in the Chinese stock market today, where there were even like glitches on the exchange. But I think that, you know, we're still kind of waiting a lot of details on how they're going to support the property market exactly. I mean, they've said some pretty strong things, you know, that they want the market to stop declining. But how exactly are they going to do that? And are we going to see more direct-to-consumer support? I think that's the side of it where we've always kind of seen Beijing policymakers be a little bit more kind of hesitant about. But I think at this stage, it's not that much about whether banks are willing to lend. I mean, banks would love to lend. It's about who actually wants to borrow.
Natalia, in Europe, so we had the ECB actually saying that some of the consumer inflation expectations dipped in August. We also had a nice speech earlier in the week by Isabel Schnabel. Are you changing your view on how many cuts we could see from the ECB this year?
No, we're not. We're not changing the number of cuts at this point. And what we're watching very closely is the PMIs. So we have seen a bit of a sluggish recovery in the European economy. European composite PMIs have been on the weaker side in the last couple of months, especially Germany. If you look into Germany, manufacturing PMIs are around 40, which is the lowest in the last year. That predominantly has been driven by the auto sector, which we have been staying away. But because we're not seeing recovery in the European market, that's why we prefer to be very specific in terms of what we want to own in Europe, and currently prefer U.S. markets over the European markets.
It's extremely difficult to, of course, you know, game what the Trump presidency really means for tariffs, which seems to be the biggest policy question mark for Europe. I mean, does it automatically change also your view on European equities depending on who gets into the White House?
We think that there may be volatility coming into the election. And if you look into the European market, the market is currently trading at 13.5 times. And the market is kind of in between the China stimulus, which has been unexpected and better than markets thought, which is positive. But on the other side, there are definitely election risks that are impacting the sentiment of Europe. And therefore, in our forecast, we don't see a lot of re-rating in the next year or so, just because of those risks that are waiting on the equity market.
I mean, the autumn also means a lot of budgets from a lot of European countries. And any question marks on France or some of these others and what they do with their debt?
Yeah, this has been a big issue that's, you know, the market has been focusing on. We especially saw this at the beginning of summer. I think at this point, the market switched into what will happen with the earnings season, because this is the next catalyst that the market is waiting for. And we don't expect a great earnings season coming off Europe, but the expectations are just so low that we think that even if companies show good enough numbers, the market may actually take it very positively.
I love that. It can only go up. Natalia, thank you so much for joining us. Natalia Lipikina from JP Morgan Private Bank, Bloomberg's Christina Lee stays with us. Coming up, Shigeru Ishiba wins the leadership race to become Japan's next prime minister. We discuss what that means for the world's third largest economy. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
there is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back, everyone. Now, the yen has surged after Japan's ex-defense minister Shigeru Ishiba won a vote to become leader of the Liberal Democratic Party and the country's next prime minister. Well, Bloomberg's Tokyo Bureau Chief Isabel Reynolds joins us now, still with us, Justina Lee, our markets reporter. Isabel, I mean, this is a wildly exciting day. It always is when there's a change of leadership in a G7 country. But Ishiba, unlike his rival, is known as a supporter of the BOJ normalizing policy. So what can we expect from him in office?
Right, yes. Well, he's said for a very long time that he thinks, you know, we should live in a world with interest rates. We shouldn't be in this kind of zero or negative situation when it comes to the cost of money. So that's one thing we know for sure. And that's one reason why we've seen all these gyrations in the markets today, because at one point it seemed as though his rival Takaichi was going to win. And then, you know, minutes later, everything turned around and Ishiba came through to take the final victory. Apart from that, he's been very much in favor of kind of fiscal rectitude. He's not a kind of reckless spender like some of the other people on the slate might have been expected to be. But in terms of foreign policy, he's almost something of a mystery, really. He doesn't have a lot of experience. He's never been foreign minister, and he's a very kind of domestic politician. But he has given some hints during his campaign that he would take a somewhat more kind of robust attitude towards the US in terms of creating a more equal partnership between Japan and, in fact, its only formal treaty ally.
And Isabel, I understand that he is also thinking of a kind of NATO-like Asia alliance, which could anger China.
Yes.
So is he going to be more, I guess, you know, will there be more change on the politics, on foreign policy, or actually on domestic economy?
Right. Well, I think his focus is very much over his career actually been more focused on the domestic economy. He hails from one of Japan's sort of poorest and most elderly and smallest prefectures in a rural area of West Japan. That's the area that he represents. And he's really made it his life's work to try and sort of improve the fortunes of these relatively poor people in the outlying areas of Japan. Having said that, he has served as minister in charge of that very issue and didn't have a lot of success in smoothing that difference over. So it's unclear exactly how he would tackle it. But that's certainly one of his top priorities. In terms of the Asian NATO idea, that came up during the campaign. It was widely sort of derided by a lot of people as largely unworkable. We don't have the same kind of sort of system of shared values in Asia. There are too many differences between all the different countries, people say, to actually form that kind of broad alliance in this region.
Justina, in terms of market reaction, so of course his win has lifted yen. It also lifted yields, and I guess that's good for, you know, investment insurance, for example.
Yeah, it's pretty interesting because obviously there isn't really explicitly a tie between the government and the BOJ, but you can kind of see signs of perhaps, you know, some political pressure that could be possible. And I think the reason we saw such a strong reaction is because previously markets thought that perhaps that his rival was going to win, and then she was like a lot more dovish. But, you know, with Ishiba, I mean, he's kind of said that he's generally, you know, a bit more of a monetary hawk. He's sort of supporting the BOJ's path currently to gradually hike rates. And so I think that kind of explains the strength of the market reaction. But going forward, it's probably back to fundamentals.
Yeah, so the market reaction is less about what he'll do. It just really indicates, you know, that Japan's economic policy will probably stay similar to what it is now, whereas his rival would have done a bigger shift.
Right, exactly. I mean, his rival has even said that, it would be stupid to raise rates now. And I think, in that case, we could have seen a bit more of a reflationary policy. I don't know, are the carry trades even coming back? But in this case, we're staying on the path here. And so I think another indication here will be kind of where is Japanese inflation going? And so we would be back to observing those.
So, Isabel, what will be the next steps in the coming days? And, what does it mean for the next elections, which need to be held within the next year or so?
Right, yes. Well, what we can expect in the next coming days is probably on Monday, he'll be appointing his main party executives. On Tuesday, we're expecting, it's not entirely confirmed yet, but we're expecting a special session in Parliament to formally vote him in as Prime Minister, and then he'll name his cabinet. And that will be a very interesting process because he's always been an outsider in the LDP. He even has a history of actually leaving the party and joining the opposition at one point before coming back. So who he will find as his close friends in the party is quite an interesting point. So it will be a fascinating day, I think, on Tuesday to see what happens.
So, Isabel, does he really start kind of thinking about the election, and will that form policy?
Yes, that certainly will be a factor in it. The election, as you say, has to be held within the next year. It's been a kind of custom for the incoming leader to actually hold an election pretty rapidly after winning the leadership of the party. Usually you get quite a big boost in the polls at that point, which is very useful, obviously, in the election. So he will be looking very much into that, perhaps bringing in some of his more popular rivals as in prominent positions to help him along with that campaign.
Isabel Reynolds, thank you so much. Our Tokyo Bureau Chief and Bloomberg's Justina Lee looking at the markets. Now, coming up, a first encounter for the new Commerzbank Chief Executive and her Unicredit rival. We look at what's at stake next.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Well, Commerzbank's management is set to meet with UniCredit today, the first encounter since the Italian bank started building a major stake in the German lender earlier this month. Now, let's get more from Bloomberg's Oliver Crick in Berlin. So, Ollie, a roller coaster of a week. Where do things stand as it comes to an end?
Yeah, Francine, it began with that sort of surprise that Orcel had actually taken additional position, 21% of the bank, and it closes with the first meeting between UniCredit and Commerzbank since this saga began. We should also say that both Orcel and Orlop were at this Bank of America conference where they were each giving kind of their views of what the future of this bank should be. And Orlop yesterday really laid it out. She wants to increase profitability. She wants to boost the payouts to investors. And the board has backed her and has backed Commerzbank independence. Now, in terms of what comes into this meeting where the two banks meeting, it's a virtual meeting. We don't know if Orlop and Orcel will be there in person, but it begins at least the beginning of a conversation that is not going away. Even if it isn't a full takeover, UniCredit now has a 21% stake potentially if they get the approval of this bank. This is a relationship that they're going to have going forward. Of course, some of the Italian officials have weighed in. They're in favor of it. The Germans are still resistant. Francine, I should say that right outside of the office in front of the Brandenburg Gate, there are two flags flying. It's the Italian and the German because Mattarella is actually in Berlin right now. He'll meet with Schultz. I wonder how awkward that'll be.
Yeah, awkward, or maybe not awkward. What are the odds of a deal actually happening?
Yeah, so listen, it depends who you ask, but at the end of the day, you need to imagine what it feels like to be a Commerzbank shareholder. Many of them have been long-suffering. We've done a 30% rally in 2 weeks. If you switch up the board and you look at sort of how investors have been treated under Orcel versus how they've been treated in UniCredit historically, in terms of how much money is flowing back, you put in and you get back out. I mean, at 6% for Commerzbank, 21%. These are the kinds of comparisons that Orcel is going to make in his case to shareholders, and that's really sort of going to be fundamental in determining the fate of Commerzbank. As far as the sort of analyst commentary is concerned, Citi sees a 70% chance of this deal coming through and ending in a takeover with a 10% premium. That is the sort of view from Citi on the street, and we're going to hear a lot more of this kind of commentary as time goes on, as these conversations evolve. But, you know, this is going to be the first touch point, and again, this is going to be absolutely crucial, this meeting today, in determining the fate of this bank.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, China's stimulus has pulled European luxury stocks higher. Bloomberg Intelligence says firms in the sector can now surpass revenue growth estimates in the second half of the year. Now, Moncler also jumping on news that LVMH is investing in the company and giving the French luxury conglomerate a seat on the Italian company's board. Coming up, the Ukraine President Zelensky is expected at Trump Tower in the coming hours. We'll discuss that meeting next. And this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Risk appetite across financial markets get another boost from Beijing's latest stimulus measures and upbeat U.S. momentum, while China's stock market erases losses for the year. The yen surges as Japan's ruling party picks Shigeru Ishiba as its next leader, choosing a backer of the BOJ's policy path instead of a candidate who opposed rate hikes. Plus, Donald Trump says he'll meet with Volodymyr Zelensky today after stepping up his criticism of the Ukrainian president in recent days. Well, we'll discuss support for Kyiv in an exclusive interview with the president of the European Bank for Reconstruction and Development in just a moment. Now, a couple of breaking news. We've had quite a lot of M&A. I'm not only thinking about the banking story, which we just covered between UniCredit and, of course, Commerzbank, but REA making a fourth offer for Rightmove. Remember, the last one was rejected. This new offer is at an implied price of 775 pence per share. I don't think the markets really believe it, because if you look at Rightmove, it's at 664, and it's actually down. But it's interesting that the value for Rightmove is now about £6.2 billion. The proposal for Rightmove is 11% higher than the initial bid. I'm not sure it's going anywhere, because usually there's a big market reaction when there's such a bigger price increase, but I could be wrong, so of course we'll follow the very latest on Rightmove and REA. Now back to our top story, and Donald Trump and Volodymyr Zelensky will come face-to-face after trading insults this week. Now the Ukrainian president is expected at Trump Tower in New York later this morning. Now Trump's presidential rival Kamala Harris met Zelensky on Thursday. The vice president describes Trump's call for negotiations with Vladimir Putin as a proposal for surrender. Well, I'm joined by Bloomberg's Stephanie Baker, whose book, Punishing Putin, was also published this month. So, Stephanie, congratulations on the book. It's a great read. It goes through basically how Vladimir Putin really put the economy first so that any sanctions, once the invasion of Ukraine happened, would be almost safeguarded. What do you make? I mean, it's incredible that Trump is meeting with Zelensky at Trump Tower on his own turf.
Yeah, it's a really high-stakes meeting for Ukraine and Zelensky. Remember, yesterday, reports were that the meeting was off. It seems like Trump has had a change of heart. And Zelensky has a tough job of convincing Trump that continued financial and military aid to Ukraine is in the interests of the U.S., and that Putin has not given up on his goals of controlling all of Ukraine. Yesterday, Biden announced this $8 billion aid package for Ukraine, which will last until the end of the year. But 2025, Ukraine is facing a financial crunch and needs continued U.S. support.
I mean, it's not only the U.S., actually, right, that may not be able to give Ukraine more support. Some countries are saying, look, they just don't have the money, and it's getting politically more difficult.
Right, exactly. And so that's part of what I cover in my book, is the need to look at using immobilized Russian assets to help Ukraine. There is, I think, a tiring amongst Western taxpayers of continuing to fund this war, but there is a pot of money available in the form of Russian central bank assets that have been that were immobilized in the first few days of the war. And my book goes into that, both the decision to freeze those reserves as well as the debate about how to use them now. And there is work being done on that that's run into a lot of troubles. But I think that there'll be increased pressure on actually trying to go after using the whole pot of money, this $300 billion pot of money of Russia's central bank reserves that were immobilized in the West.
And Stephanie, you're also a great student of U.S. politics. How's this playing out in the U.S. election?
I think it is really important because if you go off of what Trump has said, he wants to end the war in a day, which he hasn't spelled out how he's going to do that, but it does look like the only way to do that is to cede territory to Russia, call a ceasefire, and probably offer Putin some kind of at least limited sanctions relief. I don't see how Putin would agree to do that. And that's another thing I go into my book, is that this is a really high-stakes election for Ukraine and for Europe as a whole, because if Ukraine loses this war, that has global ramifications.
So Russian attacks on Ukraine's power stations are also taking their toll, forcing Kyiv to rely on more expensive energy imports. Now, damage to Ukraine's critical energy infrastructure is estimated to have caused a loss of more than 9,000 megawatts of generating capacity. Now, to that end, the European Bank for Reconstruction and Development is providing more than 700 million euros in financing to hack up Ukraine's energy supplies. Now, the EBRD has also lowered its estimate for Ukraine's economic growth to 4.7% next year, down from the 6% forecast in May. Well, with me now is the EBRD's President, Odile Renaud-Bassot. President, thank you so much for joining us. I mean, this is critical. And actually, Stephanie said it perfectly. This is a critical year for Ukraine, but not only for Ukraine, really for the rest of Europe.
Yes, I fully agree that continuing to support Ukraine is absolutely fundamental for Europe's security over the long term. And I think that Europe is fully aware of that. So there is some strong commitment to finance Ukraine for the next year, also for 2025, so as to enable the country to continue to defend itself.
Madam President, I mean, the EBRD is supporting this decentralized energy production in Ukraine. One of our columnists, Mark Champion, was also writing, look, you know, Vladimir Putin is threatening nuclear wars, but actually what he could do much easier is go after the energy production.
Yes, indeed, and we've seen that already in the first year of the war, where Russia attacked the energy network, electricity network, and so forth, and we managed, and the Ukrainians managed to rebuild and to reconstruct so as to keep electricity flowing. Now the issue is more on electricity generation, and it's a big challenge for the next winter because it needed to have a huge impact on heating, functioning of manufacturing, access to electricity. And when I was in Kiev, for example, in June, it was only in summer, electricity shortage where, I mean, every day you had a few hours without electricity. So if it happens in the winter at a very cold time and so forth, this could be very challenging. So what we are doing is really to find every ways to support decentralized energy generation, which is less fragile for attack, because more decentralized. And so that's why we put in place this credit line for financing businesses through banks to buy generators, gas generation capacities. But we are also working with the public sector infrastructure, so public companies to work, I mean, like the railway company, electricity network company, and municipalities, because a lot of things can be done also through district heating system and so forth. So we finance more than 1 billion up to now on electricity, on energy.
But, Madam President, so, I mean, part of the report also talks about how much revenue Russia is getting from oil. And so there are question marks on whether the G7 price cap is actually working.
I mean, the issue, it has worked in the sense that there has been a big shift, but other countries are buying. So the demand has shifted from European countries or Western countries to other countries that have stepped up in terms of India, for example, is buying much more energy and oil from, and China, India and China much more from Russia. So this shift has reduced the effectiveness of this instrument.
And Stephanie, going back to your book, I mean, this is all concerted, right? Was this the plan of Vladimir Putin all along? It's kind of changed the economy before invading Ukraine.
Well, what he did was profit from the war he started, because oil prices jumped in the wake of his invasion, and that enabled him to continue to finance the war even after the G7 froze Russia's central bank reserves. So I think the price cap, it's true, it has had a number of problems. It hasn't been properly enforced. They've stepped up enforcement and then stopped, stepped up enforcement and then stopped. The US, UK, and Europe have sanctioned something like 65 tankers, probably maybe more at this point. And I think that they may have more room to do that, to start enforcing that price cap. Now that oil prices are coming down globally, there's more room to do that without pushing up inflation and energy prices worldwide.
Madam President, I mean, you know, Russia's interest rates are at 19%. How do you view the Russian economy now, given the war spending, higher interest rates, but also the sanctions?
So it has been quite resilient, I think more resilient than expected in the first years of the war. What we see now is, however, a lot of vulnerabilities. Huge, tendency of overeating due to human capital shortages, people being mobilized, a lot of focus on military manufacturing and so forth. So the situation is not so great, and the interest rates remain very high, have been increased from 19 to 20% because of inflation quite high also. So there are underlying risks. So the capacities for Russia economically to continue the war is not obvious, and it's costly for Russia also.
President Zelensky is really almost on a world tour to try and, I guess, remind politicians, but also citizens about what his country's going through. Do you worry that we're at a juncture where, if not abandoned, interest in Ukraine could severely wane in terms of financing?
I think Ukraine and President Zelensky have done a great job in keeping the focus on Ukraine. Of course, it's very challenging. You have other wars. The situation in Lebanon is also focusing a lot of attention. So it's very important to keep that interest and to ensure that people in Europe, in the West, understand that this is vital for them in the long term. So I think that we've seen a continued high level of support. EU has already, as I was saying, they are find a way to mobilize the asset with the revenue generated by the frozen asset to finance budget support for Ukraine next year. We've got a capital increase in order to be able to continue to support Ukraine. So we see a lot of effort, but it's important to keep that going, because if the economy, if the budget is not financed, the country will not be able to defend itself.
When do we start talking about reconstruction? It's still an active war, and how much money is then needed for reconstruction, given we don't know how much damage will be at the end of the war, and who will stand firm with the EBRD?
I think what's important is that we are already reconstructing, because things are, key infrastructures are destroyed, and we are financing the reconstruction already now. We have invested 4.8 billion in Ukraine since the beginning of the war, so much more than what we would do in normal times. When reconstruction peace comes and the war is over, then more investment and more private sector investment will come, because I think that the challenge is now is to attract private investors in an uncertain situation.
Stephanie, what do you think Trump and Zelensky tell each other in the gold elevator of Trump Towers in New York?
Oh, that's the million-dollar question. I'd love to know. Zelensky had a call with him a couple months ago, and Zelensky described the call as in very positive terms, saying that Trump was supportive, but the words that have been coming out of his mouth more recently have been very critical of Ukraine. He called him the greatest salesman. Every time he comes to the U.S., he walks away with a check. So I think he's going to have to turn on his charm offensive and really try to persuade Trump that Putin remains a danger, and that he should be not only increasing military aid, but widening and strengthening the sanctions regime. In the book, I do show how Trump was quite skeptical of sanctions during his first term, and that the U.S. sanctions that were rolled out during that period were done mostly from pressure from Congress or his hawkish national security advisors. So I think it remains to be seen, if he does win another term, how he'll approach Russia and Ukraine.
Well, thank you for a terrific briefing. Odile Renaud-Bassot, president of the EBRD, of course, with a wonderful, important report out on Ukraine, and our very own Stephanie Baker with her book out this week, Punishing Putin. Now, coming up, how companies should be preparing for AI and the future of work. We discuss all of this with Tanuj Kapisharami, the Chief Strategy and Talent Officer at Standard Chartered. That's next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The rapid and disruptive effects of AI, climate change, and geopolitical uncertainty are having profound impacts on the future of work. Now, it's the focus of a new book out next week called Skills-Powered Organization, The Journey to the Next Generation Enterprise. Now, it's co-authored by Tanuj Kapilashwamy, Chief Strategy and Talent Officer at Standard Chartered, part of the Chief Executive Bill Winter's management team, and she joins me now. Tanuj, thank you so much for joining us. I mean, congratulations on an important book. I know a lot of chief executive and the executive team want to get their hands on it because we don't really know what happens to the workforce. What was the most surprising thing you learned in doing research?
Well, I mean, one of the most surprising things for me is how rapidly workforce is getting disrupted with emerging technologies like Gen AI. I finished writing this book a year ago. If I had to write it today, the first chapter would perhaps look a bit different than it did a year ago, just because of the rapid disruption that's happening in organizations today.
But is this job losses or actually job changes? So do we still need the staff, but we ask them to have different talents?
Well, I think the human-AI collaboration is the next big transformative work pattern, and that's happening today. You know, the question is not, are humans going to lose their jobs to AI? No. It's how are humans going to work with AI to augment productivity, to augment innovation, creativity. And I think that's the really big transformation that is happening in the workplaces.
I mean, again, not all sectors are born equal, not all jobs. What will be the industry that will be disrupted the most?
Well, I think it's going to be across the board, Francine. And I know a lot of people refer to this wave of change as something they have seen before. You know, a lot of people tell me, oh, you know, we saw automation, we saw digitization. But actually, the level of disruption that's happening in highly skilled jobs is something most businesses have never experienced before. So, you know, this is not what we traditionally call low-skilled jobs that are getting disrupted. These are really highly skilled jobs that are getting disrupted. And one of the things we talk about in the book quite a bit, and the work that we are doing in Stanchart, is jobs being as a currency of work, which was a product of Second Industrial Revolution, is not going to be relevant anymore. You know, skills are going to become a currency of work. And how do businesses build operating models where work flows to skills as opposed to traditional jobs is going to be the real opportunity if you are going to make the most of emerging technologies, AI, Gen AI, LLMs, etc.
And that, of course, changes the recruiting process as well. But, you know, there's a number of really sci-fi ideas in the book, which I'm really fascinated by. Would any of these actually ever get implemented? Like, you talk about holographic water coolers.
Well, I mean, you know, when hybrid working happened a couple of years ago, I remember saying to somebody, we kept talking about future of work. We are in the future of work, right? And a lot of conversations at that point in time was, how do we recreate water cooler moments when people are working virtually? And there's been a huge amount of innovation that's happened in that space. You know, the idea of collaborating when not everyone is in the same place. So I think the level of innovation that is happening with the advent of technology is incredibly impressive. I mean, some of the things that we are doing is we are doing the idea of skills passport. We are using Gen AI to seamlessly match demand and supply of skills to flow talent in areas of biggest opportunity and stuff that's not constrained by job descriptions or titles. So there is a huge amount of innovation happening, and actually a massive opportunity to innovate even further.
But Tanush, how far do you think this will go? I mean, will one day AI send like avatars of chief executives to meetings?
Well, I mean, I'm very strongly of the view that this is not about machines replacing humans. It's about machines augmenting human capability, right? Somebody said to me a few weeks ago, and it's really stuck with me, somebody said, it's not about whether I'm going to be competing with the machine. I'm going to be competing with somebody who uses the machine. Okay. So the ability of workers to intuitively work with AI is going to be a skill that each one of us are going to have to acquire very quickly, and that includes chief executives.
So again, what does that mean in terms of geographies where, you know, companies are hiring from? Does that change, or are there parts of the world that are going to be much more skilled in these kind of new technologies and how you operate them?
Well, I mean, look, there is a danger with AI that this is going to increase the divide in labor markets even significantly. You know, people who are able to upskill on technologies and people who are not. So there is a real danger that it increases the divide in the world. I think, Francine, that is where there is a massive opportunity for businesses, policymakers, education institutions to come together to really start focusing on how to bridge this gap between education and employability. And actually, what is the role of business in bridging that gap? Because the skills that are going to be needed in the world of work, which is both technical, which is digital data using, but also human skills, you know, because there are things the machine cannot do. Resilience, managing ambiguity, a very different type of leadership, ethical, moral leadership. That's the focus on human skills along with technical skills that's going to become really important. And I think the role of businesses to partner with policymakers in bridging this gap between education and employability is going to be critical to bridge that gap in the world in terms of labor movements.
But Tanja, I mean, I guess a devil's advocate would say, well, we need to use this technology much more radically. At the moment, we're tinkering at the edges, making the human more productive. What if we, you know, in certain parts just got rid of the human?
Well, I mean, there are areas where I think the need for humans is going to reduce. But actually, there's very little evidence we have. I mean, even if you look at some of the examples that are coming out of use of ChatGPT, where human interaction has been eliminated completely. So, I mean, the way we see it is you are deconstructing jobs, and there are going to be tasks which are going to not need human intervention at all. But then that means humans get an opportunity to free up to focus on the tasks where actually only humans can add value. I mean, I keep saying as machines get better at being machines, humans can get better at being humans. And so to me, it's going to be the deconstruction of jobs into tasks, which is going to be the big transformation opportunity.
What does it mean for a bank like Standard Chartered in terms of where you're hiring and you know, focusing technology on?
Well, what it means for Standard Chartered is that we have started thinking about build, buy, borrow choices when we are looking at recruitment very carefully. You know, we are saying that they are skills, not jobs, where we need to buy externally. They are loads that we can build internally, you know, reskill, upskill our colleagues, both on emerging technologies, but also new ways of engaging with technologies. And there are opportunities for us to borrow. You know, we are talking a lot about creating internal talent marketplaces, a gig economy internally, where we can borrow skills from people in another part of the organization that already exists. So this idea of it's not just external recruiting, but really thinking about building, buying, borrowing of skills in a seamless way to get the job done.
Tanush, thank you so much for joining us today. That was Tanush Kapilashwamy, Chief Strategy and Talent Officer at Standard Chartered. Plenty more to come, and this is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Antarctica is experiencing warming at twice the rate of the global average. And of course, Antarctica, key, of course, to a number of incredibly important species, but also the effects of warming in Antarctica will impact on all of us. The climate transition is a cost of living issue. And alongside that, surveys have shown that actually generally the public want their governments to act on climate change.
Now, that was the former Prime Minister of New Zealand, Jacinda Ardern, speaking to us earlier this week at the Earthshot Prize Innovation Summit organized by Bloomberg Philanthropies in New York. Now, ByteDance, the Chinese owner of TikTok, is set to sign a $10.8 billion loan in what would be the largest ever dollar-denominated corporate facility in Asia, ex-Japan. That's according to people familiar with the matter. Now let's recap one of the top stories out of Japan. And the yen reversed losses and surged against the dollar, while Japanese stock futures fell after former defense minister Ishiba won the leadership of the nation's ruling party. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Krenny. Danny Berger is on assignment. You're welcome to Bloomberg Brief. Let's set your agenda. A pause in the upward momentum as 42 record highs are minted in U.S. stocks ahead of the PCA data today. A razor-thin lead. The latest poll shows VP Harris edging just slightly ahead of former President Trump. And Israel softens its stance as the U.S.-led ceasefire proposal for Lebanon after days of escalation in attacks. This as the UAE pushes Washington on ceasefire efforts.
For the U.S. to have that influence, exercise that influence, and not to shy away from exercising that influence is extremely important.
More from my exclusive interview with the UAE diplomatic advisor to the president coming later this hour. So we're counting down to the PC this morning. You've got 42 record highs. There's a slight pause in these markets. That's all that I would say that you have. But I want to give you a much broader context. We have active Fed rate cutting. You've got a smorgasbord of monetary and fiscal policy from China. The risk of the ECB going live in October is now 70% on the back of the French inflation data. So the world is moving to a new regime of cuts. By the way, keep an eye on China stocks. You may need to rebalance your portfolio. David Tepper says buy everything in China. Money is flowing in, another $10 billion flowing into U.S. equities last week. Roll it over, have a look at the bonds. As I say, we are counting down to the PCE. And many people are saying this could be the validation in many ways for the 50 basis point cut that we saw from the Fed. And it could, in fact, drive us harder in the market to bet for bigger rate cuts to come. There you go, just 1 or 2 basis points lower this morning. This economy is strong. Jobless claims at a 4-month low. Of course, you got that data yesterday. Quick mention on dollar yen. Yen is soaring. Why? Because essentially you have Ishiba. He's been picked by the ruling party to lead, and essentially he's seen as a hawk. He's one of the people who did support the tightening that we saw at the Bank of Japan, and the market is coming around to thinking that there could be more hikes in the pike, coming down the pike, I should say, by December. Lombard Odier targeting 135 on dollar yen. That's state of play on the markets as we go into PCE day. Tim Graff is my guest this morning, and he writes this: China stimulus, coupled with the Fed looking to proactively and rapidly bring rates to neutral, is an excellent backdrop for risk assets into the year end. Tim is with me now. Tim, what goes through my mind is whether it's time to add to risk assets or just run my positions long until there's a red flag.
It's a really good question. I would say when it comes to the institutional investors we track, and a lot of our metrics of flow and positioning, they're really already in equities. The allocation to equities is at a very, very high level, especially relative to bonds. So I'm not sure if it's more a question of adding equity risk in aggregate, more perhaps reallocating. So we know that the positions for emerging markets, China specifically, are very, very low and have been really for years. China's been kind of a classic value trap, but in as much as, I don't think the stimulus is a perfect panacea for markets in China. Nevertheless, the short-term effects on sentiment are really positive. And so I think you could see some reallocation away from developed markets into emerging markets. And China specifically, I think, can be the beneficiary of that.
And yet many people who say that they could live without China in their portfolio for a while. Market Patrick over at GeoMacro said, gone is the equivocation on deleveraging or moral hazard. And this is a do-whatever-it-takes moment for China. And then they've got David Tepper saying, buy everything. I don't think you'd be just as effusive as that.
No, because ultimately the measures so far really, I don't think they address the structural demand issues within the Chinese economy. The monetary policy measures specifically, I mean, you could probably cut rates to zero, and I don't think it would have that great of an effect because China is in a balance sheet recession. I know you've had a lot of guests talking about that in the last couple of days. Totally agree with that sentiment. In that monetary policy, it can kind of help clear the runway for the plane, but you still need to gas the plane up, and that's where fiscal stimulus comes in. And what they've announced is good. It will shift sentiment, but it's quite small. It's 1.5% of GDP, which when it comes to kind of gassing the plane up, as it were, it might get you, say, from New York to Chicago, but not around the world by any means.
No, definitely not. Now, you really do focus on the destination here for our rates market rather than perhaps the bumpy journey. And in your view, we're going to be 200 basis points lighter by this time next year. But my question to you is this. Everybody's so consensus on soft landing. And in that soft landing, is that a 200 basis points is a soft landing in terms of cuts?
Yeah, absolutely. And I think it kind of underestimates. I'm by no means bearish on the U.S. macro story, but I do think the probability of something harder is probably underpriced. We are in an easing cycle. We know the labor market is rebalanced and maybe showing signs of slowing. We know inflation isn't a problem. We know that the pandemic-era stimulus that was accumulated in household savings has largely been spent down. So, again, not bearish by any means, but I think the probability of a harder landing is maybe higher than what the markets are assigning. But look, my base case is still that the proactive nature of Fed policy helps to lock in the gains and to extend the soft landing at the least.
So what does the disinversion of 2s10s do for you? I mean, we've had 6-7 days of this, 22 basis points. It's been really quite rapid. Are you a glass half full or glass half empty when it comes to looking at the disinversion? There we go this morning, 15. So we've come back a little bit.
Yeah, I mean, typically you would see that as somewhat of a bearish signal, and I think that alludes to the hard landing probability that I just talked about. But this cycle has offered so many unique facets, whether it's the pandemic era data or how households have responded due to some of those stimulus measures and that prolonging the U.S. recovery, I think, a lot longer than people had initially forecast. So to be honest, I don't read too much into both the nature or the scale of the move. I think it's a natural reaction to inflation expectations perhaps rising off the floor a little bit and needing to have a little bit more term premium in the long end of the fixed income markets. And to be honest, probably some of it is profit taking after a very strong rally in duration from, say, early April into the Fed meeting last week.
Can you see a scenario, and I know this is something you're going to talk about in your podcast. You're coming from a job, Tim, so well done on that. I know you got a new podcast discussing markets. So what part of the conversation is going to be around whether they go for another 50 basis points? Because it's again, the market pushing against the dots, isn't it?
It is a little bit, yeah, and the market has definitely overpriced relative to the dots. But even there, the market is only pricing rates to get back to what the Fed considers neutral in about a year, 15 months' time. The market is not pricing rates to get easy. And so I think there's more alignment, at least philosophically, between the market and the Fed than what people appreciate. The market is not pricing a hard landing, even if it has dislocated a little bit from the dots. That deviation, as we've seen earlier this year, when the market was pricing 7 cuts of 25 basis points versus a much more reticent Fed, that deviation can go away very quickly, and it's pretty small to begin with.
Okay, you're going to stick with me because a little bit more work to do. Politics is the alpha in this show as we run down to the election. Tim Graff from State Street stays with me in just a few moments. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. ARM made an approach to Intel over potentially buying the company's product division. Intel told them it's not for sale. ARM didn't express interest in Intel's manufacturing operations, the other main unit. And the recent takeover speculation surrounding Intel marks the company's rapid deterioration after having been the world's biggest chip maker. DirecTV and Dish are in advanced talks to merge in a deal that would make them the largest US pay TV provider. Combining the companies would give you 20 million subscribers. That's according to people familiar with the discussions. An agreement could be announced in the coming days, but the details are being worked out, and the talks could be delayed, maybe even falter. And Hurricane Helene slammed into the western coast of Florida with intense rain and floods expected hundreds of miles inland. The massive storm, with winds of 140 miles per hour, is expected to inflict damage on cities across the state and in Georgia and North Carolina. Coming up, razor thin. VP Harris leads just slightly over her Republican opponent, Donald Trump. We'll take a closer look at the latest poll. That's in Bloomberg Brief. And later this hour, we'll count you down to the PCE with Jay Woods from Freedom Capital Markets. He joins me around the desk this morning in New York.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. On October 1st, with the election weeks away, the VP candidates are set to face off. When we fight...
You guys are going to get me all fired up again.
Trust Bloomberg for news and analysis.
So is it style or substance, or maybe both? We'll be hearing from Tim Walz and J.D. Vance in prime time.
Yeah, and the question is whether the vice presidential nominees are actually able to move the needle.
Tune in for the CBS News Vice Presidential Debate simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
Some in my country who would instead force Ukraine to give up large parts of its sovereign territory, who would demand that Ukraine accept neutrality and would require Ukraine to forego security relationships with other nations. And let us be clear, they are not proposals for peace. Instead, they are proposals for surrender.
was the Democratic nominee for president, Kamala Harris, distinguishing herself indirectly from her opponent, Donald Trump. Harris spoke. She and President Biden met with Ukrainian President Vladimir Zelensky in Washington. Let's dive a little bit deeper into the political narrative. We have our chief political correspondent, Anne-Marie Hordern, around the desk. So, Anne-Marie, Donald Trump's going to speak to the Ukrainian president a little bit later on today. Of course, it could be said, and I listened to you yesterday on Surveillance, Zelensky maybe has misread the tea leaves and the mood music here in America. He certainly irked Trump.
Definitely, he unnerved the Trump campaign. So he comes to America, and his first stop is the swing state of Pennsylvania, gets a tour of an ammunition factory with Governor Josh Shapiro, who's one of these beloved individuals within the Democratic Party. Then he sits for an interview with the New Yorker, and he calls his running mate, Senator J.D. Vance of Ohio, too radical, and then basically said he didn't think Trump really understood what a peace plan would mean. Interesting, because it was a different tone than Zelensky took with me when I went to Kyiv over the summer. Yeah. And he talked about the fact that, the sense I got is he really wanted to get in a room with Trump. If Trump has a plan to end this war and for peace, we should do so. What was interesting is, and Trump posted this on his Truth Social yesterday, he posted the exact email he got from the deputy ambassador, which was a message passed on from Volodymyr Zelensky to Donald Trump, and it said, we in Ukraine want to end this war. It didn't say win this war. A little bit of a nuance there. Potentially Zelensky knows the audience he is playing to. They were supposed to meet, then the meeting was off, and now they're meeting tomorrow morning. This morning. You're seeing this with a lot of individuals here at the UN General Assembly. They're all hedging their bets, depending on, they're reading the polls that we're all reading. They see it's 50-50, and they're hedging their bets, and they're making sure, whether it's out in front of the cameras or behind the scenes, they are making an effort to meet with individuals, part of the Harris team or part of the Trump team.
Yeah, I mean, even I sat down with Anwar Gargash from the UAE, Mohammed bin Zayed. You know, they went and they had dinner with Trump. Everybody's preparing for any eventuality. For them, it's about technology and security. Just the line from Trump, he's making little nasty aspersions towards our favorite president and me. So you know, this is a tough one to balance. Look, talk to me about the polls, because, again, razor thin, there's the Morning Consult poll, razor thin lead for Harris, but she's chipping away on some of the big issues, which is the economy, and this is where it's critically important.
Yes, because given all the months we've done this poll for almost a year now, that has been the top priority of swing state voters, the economy. And you saw constantly in this poll that the trust factor leaned into Trump. When you ask individuals, who do you think is better on the economy, they would say Trump, especially when it was vis-a-vis Joe Biden. Now that Harris is top of the ticket, she's chipping away. She is leading basically in all the swing states besides Georgia, but this is within the margin error. Okay. This is on a knife's edge. Some interesting points, though. Plurality of respondents say the Fed's recent interest rate cut makes them more optimistic, but voters to give the national economy low marks. But they are starting to give a little bit more trust in Kamala Harris. She has been able, and she was able to do this at the debate, she has been able to almost paint Trump as the incumbent, given the fact that so many people are unhappy. You see how they're saying the national polling, how they think the economy is doing, she's the incumbent. People do not like the idea of Bidenomics. They blamed Biden for inflation, and she is able to put some distance there, and she's starting to win on some of these economic issues.
Well, her whole narrative is she's reaching out to the middle class, making the middle class, you know, tax cuts for the middle class, those under 400,000, and at the same time, she's sort of standing there saying, I am a capitalist, which is trying to overcome that comrade Kamala narrative that Trump has been pumping. There is one other thing I want to touch on. Secretary of State Antony Blinken, he's going to meet with his Chinese counterpart today. Again, this is all about the future, the next leg of the relationship between the United States of America and China if they come back to power.
And there's a host of issues they can talk about, because when you look at all of the global issues right now, China and the United States are basically on opposite ends. And then, of course, not just the security issues in the United States is concerned about in the Indo-Pacific, which we saw Biden recently in a hot mic moment saying that China is testing us, meaning the West. There's also the economic security concerns. Also, we should note this meeting likely ahead of what potentially is going to be a phone call between Biden and Xi Jinping in the coming months, or even a meeting at one of these final moments that Biden would be going to a global international conference in South America. So I think this probably sets the stage for that bigger meeting between the two leaders, but there's really a host of issues. And there's an interesting quote from the Deputy Secretary of State, Kurt Campbell, recently saying, frankly, the Cold War pales in comparison to the multifaceted challenges that China presents, and that's what they're dealing with right now.
Okay, you won't have time to go to South America for this trip. You've got plenty on before the election.
That's for sure.
And after. Anne-Marie Hordarn there on the very latest Consult poll and the state of play here at UNGA this week. She will be on surveillance in just under 45 minutes. My guest this morning is Tim Graff. He's still with me. Tim, listening to Anne-Marie, looking at the polls, razor-thin lead in the poll in the swing states for Harris. From your position and from an investor's position, the consensus seems to be give us a divided, Congress. That is the best solution for us in markets.
I think that's right. That's what we've had for the last 4 years, and it seems to have been a pretty good scenario for markets. And so I think that is the hope, that you effectively see continuity. Pure continuity would probably be Harris and a divided Congress. I don't think Trump and a divided Congress would be, there'll be nuances, but I think the ultimate outcome would probably maybe be slightly worse for equities, but largely I think the differences are pretty small between the two. It's all about how much of a kind of broad mandate or ability to get things done with Congress they would have, and the less ability they have, the markets, I think, probably view that as a positive.
Do you believe in the inflationista narrative that's propagated around a Trump victory? He has very squarely said he will use tariffs, he will mount a campaign of deportation, etc., and go hard on immigration. Has that got a real impact and outcome in the bond market yet? It's not there yet in my mind.
It's definitely not there yet. I don't quite buy into that because I think it is most likely we will have a divided Congress. And so he might get something on fiscal policy. The tax cuts from his first term expire at the end of next year. He might get some ability, some concessions to extend that as part of a broader budget deal, perhaps. But that would be, I think, fairly limited because this is policy continuity. It's not new fiscal policy. On the immigration side of things, he has, of course, a little bit more leeway to impact immigration, but there's also a massive set of institutions and legal challenges that could be brought in the U.S. You look at things like the Dreamer Act, or some of that legislation from his first term and Obama's term that got bogged down in courts and in legal discussions, and I think it's very easy to challenge some of those things. So I'm not quite a big believer in that aspect of it. Tariffs, absolutely, and I think we should take him at his word. That is the real concern for me, is whether he gets in office and does slap as aggressive a tariffs on China, Europe potentially, as he has talked about.
Well, it is the ramp up to get the deal done and then see where you can delever. Tim, thank you very much. Enjoy the rest of your Friday. That's Tim Graff of State Street. Coming up on the show, Israel's easing its stance on a ceasefire deal. More on the details with that, along with your front pages from around the world on Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears. Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Manus Crenny in New York. Let's get you up to speed with the front pages from around the world. First up, Washington Post. Japan's ruling party elects Mr. Ishiba as the new prime minister. He is set to become Japan's prime minister next week. The outspoken former defense minister clinched the leadership of the ruling Liberal Democratic Party at his 5th attempt. Certainly moving dollar yen this morning as well. Yen strengthens on the back of that. We'll talk more about that in a moment. Next up, New York Times, Netanyahu defiant as the world leaders press for an Israeli-Hezbollah truce. The Israeli Prime Minister's office issued a statement early this morning stating this. The Times also reporting that the White House had believed that Israel was on board with a 3-week ceasefire before Israel initially defied the truce proposal. And the Financial Times, LVMH backs Moncler chief. They're increasing their stake in the luxury jacket maker. The deal backs CEO Remo Ruffini and allows him to increase his shareholding in the Italian company. Moncler maintained its growth in the China market, while most luxury brands saw a little bit of slippage there. So that's had a really sort of knock-on effect right the way across the entire luxury sector. Not only will LVMH get involved in this 10% holding, but it's going to give them a seat on the board. And so you're seeing a nice carry-through, carrying up 5.7%. Richemont, again, the bargain hunting. Katrina Dudley was with us yesterday, and she made it very clear this is where she wanted to go bargain hunting. Have a look at the sector, and you see this week in the European market, and this is very specifically where the bargain hunters perhaps have trained their sights. Snapshot of the bond market. We're kind of down to PCE later on today, plus 0.1% on the core. The headline will dip to 2.2%. So bonds are laser focused this morning.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you were the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manish Krani. Danny Berger is on assignment. Let's set your agenda. A pause in the upward momentum as 42 record highs are minted for U.S. stocks ahead of the PCE data today. A razor-thin lead. Latest poll shows VP Harris edging just slightly ahead of the former President Trump. And Israel softens its stance on a U.S.-led ceasefire proposal for Lebanon after days of escalating attacks. This as the UAE pushes Washington on the ceasefire efforts.
For the U.S. to have that influence, exercise that influence, and not to shy away from exercising that influence is extremely important.
More from my exclusive interview with Dr. Anwar Gargash, the UAE diplomatic advisor to the president, later this hour. So we have had this roaring rally. 42 records have been minted. You can't even call this a pause, really. What it is a moment of reflection. You have a new narrative in global rates, from China to the potential of Europe going another 25 basis points, more than the markets had anticipated, with a cementing of our 50 basis point cuts. So this is a magical combination, according to State Street. They were a bit skeptical on the China, on the narrative around China. Probably it's enough gas, but it's not enough to get a plane from New York to Chicago. The bond market is going to be absolutely laser focused. It's taken its auctions quite well this week. Today is about validation day in many ways. Yields tick down ever so slightly. The PCE, core PCE plus 0.1%. The headline on PCE will dip to 2.2%. But personal spending is strong. Personal income, I should say, remains strong. We're looking for a nice bump in personal income. Jobless claims are at a 4-month low. GDP, solid. This economy is rocking. But does that translate? Is the economy the stock market? Is the stock market the economy? Chief Global Strategist for Freedom Capital Markets. It is Jay Woods. Good morning. How are you?
Hey, I'm good, thanks. I don't know how to start after that setup.
You'll take that the market is roaring. But let's put the market in context. 42 record highs. But if you look at the quarter that was, the last time you were with us was August the 5th. It was a very, very different world. You look under the hood of this, though, Mag 7 has not performed relative to the market this quarter, has it?
No, and that's a great thing if you think about it. This goes to the broadening of this rally. 42 new highs. September, we bucked that September trend. We're about to have our first up September since 2019. We're heading into an election where we're going to get some crazy headlines. I expect some more volatility, but everything is playing out to form, and the setups are there for us to have a nice tailwind. If you see an NVIDIA, which is still 13% off its high, now consolidating, looking to break out, make that leg higher, even just get back to its 52-week high, we saw this movie before. It happened last year. Last August, NVIDIA sold off after a nice earnings period. It consolidated. It closed the year right at record highs and then broke out in January. It's going to take the market. Micron was probably the appetizer, and now we'll see how the rest of them follow.
Okay, I mean, Micron had a barnstorming day on the back of their results, but there is this bullish rotation, which is the headwind to the narrative that you've just given to us, isn't there?
Yeah, well, technology, if you look at the third quarter performance, energy, the worst sector, what's next? Technology. It's even for the quarter. What happened? Real estate, utilities, financials, industrials doing well. So this is the lifeblood of a bull market rotation. You hit it about the economy not being the stock market, but all things are humming together. This is positive. Then historically, after the election, that's when we rally. The fourth quarter is the strongest part of the year. I suspect that to continue. And then once the tech plays catch up, I mean, we had a 35% drawdown in NVIDIA alone. Google's 13% off its highs. Meta, Apple, well, Meta's making new highs, the only one, but Apple and Microsoft still 5% to go. I think they get there.
I was looking at volatility. If you look at volatility relative to the S&P 500, okay, it's not at 60. Well, you were here on August the 5th.
Yeah,
okay.
that was crazy.
That was 60 on that day. So this is anemic probably for you. But have a look at this, because this is VIX relative to SPOOs, and it is elevated. Do you think that's just a little bit of angst over the election coming up?
Yeah, I definitely think it's election headlines, and then when you get a spike in the VIX like we had on August 5th, you tend to get aftershocks. We had one a few weeks ago where we spiked to 30. Let's see what I think the CPI number and then the jobs number next Friday are the two big numbers we're watching, focused on that dual mandate. That jobs number for September is really going to be in focus. The 50 basis point cut won't really have an impact just yet. But that'll tell us, will we go 25 and 25 to finish out the year?
But good news or bad news, and we had this conversation with Max Kettner the other day, which is, a solid jobs report is good news, growth, lovely for stocks. Yeah. Poor jobs report, bring out the Fed put. But where do you come down on that?
Yeah, well, I come down, you got to put these things in perspective. And what was happening was unemployment was starting to trend higher, but it's trending higher from historical lows. We're still at 4.2%. Yeah. Historically, this is fine. We're back to 2019
it's full employment. It's full employment at 4.2 or 4.4.
The fear is that if they don't address it, they raised the fastest they've ever raised in the history of at least our lifetime. I don't know what they did before, 1960, let's say. But the pendulum has swung so far so fast. COVID to post-COVID, now we're normalizing, and I think this first cut, one, they admitted they should have cut back in July when they didn't, so they went 50. That kind of caught us by surprise. The market took a half a day to digest it. And what have we done? We've slowly ticked up. You never short a dull market. And this has been a dull market for September. I'm surprised. But yes, come election time, I suspect we're going to have some cats and dogs headlines that will cause some volatility in this market. Who knows?
Do you see this 50 basis points that we've had as just a catch-up cut? Because the risk is that they'll struggle to go in November because it is around the election.
Yeah, I don't think the election will matter. It is election day, and then the day after is when they meet.
Straight after.
I think the 50 basis point, the bears love this because, the last time we finally started a rate cutting cycle and it was 50 basis point, 01 and 07. All right, there were different times. We're doing this 2% off of and now at all-time highs. When you cut towards all-time highs, that means the economy's doing well. We're just softening things. This is fine. It's not going to be the pivot and cause the recession, the imminent recession that people are talking about. We'll revisit that 6 to 9 months down the road. But the next 6 to 9 months, I think we have smooth sailing.
Are you going to throw your hat in the ring for a 6,000 level? Everybody else has got one up there. Can you call it?
Let's just put it this way. Given where we are, a 5% rally from here is just over 6,000, 6,100. I think that's a safe call. But when you say 6,000, it's a big round number, and everyone's like, that's a huge call. No, another 5% rally to add on to this market? No, not out of the realm of possibility. In fact, I expect it.
Okay, Jay, thank you so much for being with us this morning. That's Jay Woods, Freedom Capital on the markets. 5%. We can do that in blink of an eye. Coming up, President Harris is on a razor-thin lead over the former president, Donald Trump. We'll take a closer look at the latest poll. That's next. Context Matters on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There are some in my country who would instead force Ukraine to give up large parts of its sovereign territory, who would demand that Ukraine accept neutrality and would require Ukraine to forego security relationships with other nations. And let us be clear, they are not proposals for peace. Instead, they are proposals for surrender.
That was the Democratic nominee for President, Kamala Harris, distinguishing herself indirectly from her opponent, Donald Trump. Harris spoke as she and President Biden met with Ukrainian President Volodymyr Zelensky in Washington. Let's dive a little bit deeper into the political narrative this morning. We've got our senior White House politics correspondent, Gregory Corti. Greg, good to have you with me. Donald Trump, we understand, will meet with the Ukrainian president today. Now, there's been a few insults flying around, hasn't there, before this meeting? I mean, Trump has said he's making little nasty aspersions towards your favorite president, that's me. So Donald Trump's going into this meeting. It's going to be, at the best, testy at the start, one could say.
Yeah, so this is something that we see world leaders do sometimes, is acknowledging the domestic politics of our support for Ukraine or Israel or some other ally, and really try to work this. So Volodymyr Zelensky went to Pennsylvania, Scranton, Pennsylvania, where they make artillery shells that are essential for the Ukrainian war effort. Donald Trump took that as a personal insult, and his allies on Capitol Hill are opening up a congressional investigation whether there was anything improper about that visit. This meeting at Trump Tower about 4 hours from now, maybe it's an olive branch, maybe it's an opportunity for Zelensky to try to reach some kind of common ground with Trump. But these are two sides that are very far apart, see this situation very, very differently. And Zelensky made some comments earlier this week as well about Trump's running mate, J.D. Vance, who is a sort of a chief critic of the Ukrainian war effort. And so, yeah, we see then Vice President Harris and Biden really trying to make this contrast, pledging $8 billion in new defense aid to Ukraine, and really sort of setting up this very different contrast between the two candidates on this issue.
Yeah, well, it's certainly going to be hotly watched this morning. We've also got a new poll from Morning Consult. That gives Harris, I think we're describing it as a razor-thin edge over President Trump. But it also tells us the populists want to know more about Kamala Harris and her policies, and she seems to have made a little bit of ground or chipping away on the economic front.
Yeah, so one of the chief criticisms of Kamala Harris as she was elevated to the top of the Democratic ticket was that she really hasn't come out and explained where she stands on a lot of key issues, on inflation, on the economy. And then what happened was the debate earlier this month. She has now surpassed Donald Trump on the question of which candidate do you think has the most detailed plan. She's been out there talking about inflation, price gouging in groceries, the affordability of housing. Economists can quibble with her plans, say they're not detailed, say they won't work, but she's really addressing the issues that voters most care about, those kitchen table issues, and she's backing that up with millions of dollars worth of political ads in these seven key swing states talking about these issues, and that, I think, is what we're seeing. She's slowly starting to gain ground against Trump on some of these key economic issues.
Yeah, and just the middle-class component of it, you know, she went on tape the other day, I'm a capitalist, and she's making an 11-point advantage with the middle classes. Back to policy in this administration, you've got the U.S. Secretary of State, Antony Blinken. He is going to meet his Chinese counterpart today. And people are saying this is setting the stage or the theater for a much bigger conversation between Xi and Biden, or maybe even a meeting.
Yeah, so obviously the U.S.-China relationship is very complicated, very difficult to manage. They're worlds apart, they're time zones apart, and so very often diplomacy is incremental. This isn't a good opportunity because, as anyone who's tried to navigate New York traffic this week knows, it is the UNGA week, it is the UN General Assembly in session. The world leaders are there, and it's an opportunity to sort of reiterate where each side stands. So these kinds of meetings spend a lot of time just getting started, reiterating U.S. policy on Taiwan, on the South China Sea, and importantly, going back to the Zelensky issue, China's support for the Russian war effort.
Okay, Greg Corte, thank you very much for joining us from Washington this morning. The Israeli Prime Minister Benjamin Netanyahu is set to address the UN General Assembly later today. Now, this comes as he pledges to hold talks on a U.S.-proposed ceasefire deal in Lebanon. The deal is seen as a last-ditch effort to prevent this week's fighting in Lebanon from spiraling into a full-scale conflict. Let's get more on the story with the managing editor for the Middle East and North Africa, Honor. And Honor, this is a shift by Netanyahu in the space of 24 hours. Some of his cabinet may not necessarily be on board, but it looks like a shift from him. What's the latest?
That's correct. The U.S.-backed, well, U.S. and French-backed proposal to introduce a 3-week-long pause to the fighting between Israel and Hezbollah in Lebanon has been met with great skepticism, if not pushback, outright pushback in Israel, especially, as you said, some members of the ruling coalition led by Prime Minister Benjamin Netanyahu, including his Security Minister Itamar Ben-Gvir, who's a sort of far-right member of the cabinet. And we first saw that Netanyahu himself and the government was reluctant to give their full backing to this U.S.-backed proposal, but there has been some shift over the last 24 hours with Netanyahu's office saying that they're open to being a part of the discussions with regard to these talks. But nevertheless, there has been great skepticism in Israel about this proposal. Even the leader of main opposition, Naftali Bennett, who might as well be a contender against Netanyahu when elections are held in Israel, has said that the timing is not right for Israel to basically entertain such a thought because of the success of the operations against Hezbollah.
And just briefly, we're going to hear from Anwar Gargash from the UAE in terms of their view lobbying America. Other regional powers and global powers, what's the very latest from the other protagonists of this ceasefire deal?
Well, other key U.S. allies in the region, such as Qatar and Saudi Arabia, were part of the coalition of countries that backed the proposed truce deal that was unveiled on Wednesday night. And as you said, Anwar Gargash, I think when he spoke about the need for the U.S. or about their call for the U.S. to do more to leverage its relationship with Israel to force the country into a truce negotiation, he was speaking more on behalf of, I think, the whole region. The feeling across the Middle East region has been quite uniform since the war began last year, that the U.S. should do more to provide incentive for Israel to be a part of the truce talks.
Honor, thank you very much, Honor, and on the very latest on the Middle East. Well, I caught up with Anwar Gargash, the UAE diplomatic advisor to the president of the UAE. Let's take a listen.
It's extremely important that the deal for a ceasefire works. We are, very thankful for the efforts of the United States and for France in this. We do really need to see a ceasefire in Lebanon.
All these efforts are to avoid a ground invasion. Can that be avoided? How optimistic are you that that can be avoided?
Well, again, the efforts are to avoid that. The efforts are also to avoid further human suffering. The efforts are to allow many of the civilian population in northern Israel and southern Lebanon to return, and the bigger picture also to avoid something that we've all been worried about collectively as the international community, which is an expanding war.
But are you hopeful that we can turn this back?
I think we should be hopeful, but we should press hard. I think the United States has a key role here, but we all have a supporting important role of pressuring for a ceasefire and seeking a political solution for Israel's concerns and for Lebanon's concerns.
Do you still put the same store of value on the US's influence in this process? Many have said they are losing influence.
Well, very much. I think if the US is a positive agent in the region, and for the US to have that influence, exercise that influence, and not to shy away from exercising that influence is extremely important. Any vacuum that is left by America in the region through a political role, through a persuasive role, through the sort of might of the US presence, shy of a military involvement, will actually lead to a vacuum that is problematic in the region.
You don't see that as a real risk. You feel that they are fully committed to their role.
I think they are extremely fully committed. I mean, there are times where we would like them to do more in terms of leveraging their relationship with Israel, for example.
Have you made that clear to Biden?
I think we have made it many times at foreign ministry levels, etc. And it's extremely important. And I think we are, as they know, a trusted regional partner in these efforts.
Look, in a post-Israel-Gaza conflict, in a post-situation, what role will the UAE play in Gaza? What do you need to be in place for you to fully involve yourself?
I think we will play the role that we are playing today, which is a very constructive role. Now you can expand that constructive role post-conflict, and I think this is something we would like to play. We are involved in various discussions about stabilization with the United States, with other partners also, because as you know, everybody is worried about the next phase in Gaza. So clearly we are also very concerned. We are playing a very, very constructive role also on humanitarian. We're one of the largest players on the humanitarian issue on Gaza, and we will continue also to do that, and we'll double down.
That was our exclusive conversation with the UAE diplomatic advisor to the president, Dr. Anwar Gargash. Coming up on the show, we're setting up for your trading day. We're counting down to the PCE. That is front and center for the bond market and those Fed watchers. This is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's your Friday edition of Bloomberg Brief. I'm Manus Cranny in New York. I look ahead today. This is what we've got. PCE, core PCE, along with personal income and spending data at 8:30 a.m. Expect a bit of a bump in the spending side and the core to drop. NVIDIA CEO Jensen Huang speaking at an event in Washington, D.C. at 12 noon. We just heard from Jay Woods there, of course, a big buyer of that name. And we'll hear from the Fed Governor Michelle Bowman at 1 p.m. Some movers for you. Costco extending a post-earnings decline. They missed on the revenue, stretched valuation. Supermicrocomputer falls after double-digit post-market plunge on the Justice Department, saying that it will review an ex-employee's claims that the server maker violated accounting rules. And then you got Bristol-Myers Squibb. They're gaining on approval for the first new type of schizophrenia drug in 7 decades. Some markets for you to keep an eye on. This is what we're going to check in. First of all, we've got the oil markets giving up nearly 6% on the week. We said again, there is fundamental concerns in this market that you're going to have new Saudi barrels and Libyan barrels coming down onto the market. Libya adding maybe an additional 500,000 barrels, and Saudi, OPEC Plus, aiming to add back 180,000 barrels by December, the beginning of December. I'll leave you with a snapshot of equities because there's a lovely note from Bank of America, the flow show. We're steady as she goes at the moment, 5,800. There's a coalition of the willing in terms of rate cuts and China policy. Bank of America, you've got a bubble dream. The Fed are slashing. Oil is crashing. China is inflating. The world's stock market cap is set to surpass October 2021. Who doesn't like a bubble dream? Surveillance is up next. They'll keep the dream alive. This is Bloomberg.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investment that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We do feel like we're getting closer to reaching an inflection point, but it's not clear which way the economy is going to break.
Consumerism is very strong right now. We think the consumer is actually really well set up here.
What won't likely validate the Fed's 50 basis point cut will be how good the consumer continues to do.
The consumer is moderating. It's not a terrible thing. This is what we were hoping for.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Friday at all-time highs on the S&P 500. What a week in this stock market. Equity futures right now on the S&P, little changed. On the NASDAQ, we're down about 0.2%. One market where it's anything but little change this week. Check out China. 8-day winning streak on a CSI 300. This week alone, up almost 16%. Alibaba up almost 20. LVMH up 18. Rio Tinto up 10. Bank of America this morning. It's a bubble dream.
Basically, what we're looking at is bazookas firing on all sides, or at least that's the feeling that people have. The latest being from China, which is sort of the last one, the last shoe to fall. People wondering when they were going to come out and actually pledge to stimulate the economy. The Politburo coming out, calling on the population to earnestly enhance the sense of responsibility and urgency of doing economic work well. Now we have a big rally in asset markets. Let's see if the economy can follow.
The markets are waking up to it. The CAC 40 in Paris, France this week up by 3.5%. It's quite a run in Europe.
It's a huge injection for Europe because they are so reliant on selling these goods into China. Europe is only going to do well if China does well. So when you have the Chinese coming out and saying that it's necessary to respond to the concerns of the masses in China are the masses in Europe. On top of that, the European data today in two countries, France, showing inflation actually falling. Everyone is now starting to think maybe we will get another ECB rate cut. It feels like this potentially is going to help lift Europe.
Not just France, Spain as well. The euro dollar right now, 111.62. We've talked about it all week. The output, the growth backdrop, not great. Inflation south of 2% in France, in Spain. Are we getting closer and closer to another rate cut of the ECB? It sure feels like it.
If they don't cut rates, what's wrong with them? That's sort of the feeling that we have in markets. An 80% chance of a rate cut at the October 17th meeting. Basically, you have inflation falling below that 2% target in both France and both Germany, across the euro region. A real question here, why wouldn't they? And if they wouldn't, how much does this actually end up torpedoing growth in a way that's going to be negative for the euro anyway? That, I think, is an increasing feeling in markets right now.
That's euro dollar. Let's talk about Japan and dollar yen. Dollar yen 143.11. This is a real gap lower by 1.2%. Japan's ruling party picking its next leader, and its next leader is a backer of the BOJ's effort to normalize policy.
And the fact that there was such a rush into the yen, into strong yen bets, really shows just how much this is going to matter. Basically, the next leader here potentially is going to be Shigeru Ishiba, who backs the idea of normalization, and just that alone really puts the thumb on the scales of possibly hiking rates yet again. Again, this just speaks to how the door is open to a normalization across the world.
We're talking about what's going on in China, how they're having this massive uptick when it comes to equities. Then you talk about this new prime minister entering Japan, someone who potentially is keenly focused on the geopolitical concerns and what China is doing in the Indo-Pacific. This is someone that is backing the idea of an Asian NATO. And I think amongst all of this high of the equity markets, you're kind of missing some of the security concerns happening right now.
Dollar yen right now at 143. If you are just joining the program, welcome to the show. A lot to work through. Equity futures on the S&P 500 down by close to 1/10%. No drama here. Yields are lower by a single basis point. The 10-year still in and around 380 at 378.79. Coming up on the program, Marvin Lowe of State Street saying the Fed put is alive and well. Bloomberg's David Gura as New York City Mayor Eric Adams prepares to appear in court. And I'm Rita Sen of Energy Aspects on the prospect of a crude market share war. We begin this hour with stocks heading towards a third week of gains on the S&P 500. Marvin Lowe of State Street staying bullish, writing this: the Fed put is alive and well. The Fed's willingness to start with a 50 basis point rate cut, while remaining data dependent, essentially hands the market the option to push the Fed towards 50 on any sign of economic weakness. Marvin Lowe joins us now for more. Marvin, I've said this a few times over the last week. Does it get much better than this?
You know what? It's a pretty good time right now with the stories coming out of China, certainly. The global cutting cycle and discussions that it might accelerate is just good for risk assets. And, you know, let's not look that gift horse in the mouth.
Marvin, the miners are up, luxury's up, Chinese tech is up by almost 20% so far this week. We've seen this movie before. You get hints of stimulus out of China, we rip for a little bit, and then we roll over. Is it different this time?
You know, it's pretty significant. Certainly, it does seem as if the central government is looking to stabilize at least the economy through the financial markets. It's a real question to us whether or not, you know, similar to whether or not Wall Street can make its way into Main Street, whether or not these actions can once again drive a more active consumer that has really had problems feeling comfortable with the economic situation there. So that's to be seen. But from a market's perspective, this certainly is supportive.
There's a broader theme here, and this, I think, is what really got people's attention this week, which is maybe the market underestimated just how much the Fed's cutting cycle would open the floodgates to the rest of the world also taking easing steps. How much is that what we're seeing and basically paving the way to a global easing cycle that really fuels more growth than people previously expected?
You know what? I've always been of the thought that while everyone expected the Fed to cut, it really took a view of how the cycle was going to evolve in their minds, in the FOMC's minds, to get investors comfortable with how that might domino through the rest of the world. So yeah, there is a bit of that, even though everything has been, you know, fairly well priced. A looser monetary policy coming out of the U.S. just makes it a lot easier for the rest of the world to ultimately follow along.
Is it now just a potential policy error waiting for the ECB not to hike, or not to cut rates in tandem with the Fed more aggressively, just simply because they have inflation below 2%, they have growth rolling over, they've got a whole host of potential challenges. There is no argument for them to keep rates where they are. Am I missing something?
Yeah, no, I agree with you completely. What is going to be interesting, I think, as we go into next year, are potential changes in R-star, kind of, if you will, this neutral rate, where in Europe, it looks like their R-star could potentially be lower than what it was before the pandemic. Where in the U.S., we're still debating whether or not kind of this 2 7/8 neutral rate, which is, you know, almost 50 basis points above where it was before the pandemic started, makes sense. You know, does it need to be even higher than that? And that's kind of the monetary policy dispersion that we had been expecting really for the last year and a half, which is now finally playing out.
Marvin, leaving the ECB to one side, how promising is it for Europe, basically only dependent on how well China goes with these new stimulus measures?
I mean, for sure, we have to look underneath the covers there and wonder what that economy looks like. It's, again, part of that R-star discussion I'm talking about. It's Germany's really real inability to kind of get out of its doldrums. I do think it is a sick type of economy that takes a lot more than just this one sugar dose. It'll help for sure, but there's still a lot of underlying concerns.
How difficult is to understand the German economy when you see the headlines coming out of, say, the auto industry, but then you look at where the DAX has been trading?
Yeah, I mean, for sure. Again, it's the separation between Wall Street and Main Street to a certain degree. Germany has really benefited from a pre-pandemic world, which was much different from a geopolitical perspective, which is, certainly impacting Europe a bit more than it might be the U.S. economy. And we really need to think through that as a potential headwind as we go into an environment where geopolitics potentially becomes a much higher headline concern than it really had been in the, mid-2010s, if you will.
Okay, putting aside potential geopolitical shocks, you are potentially much more bullish than you were, say, a week ago. Is that an accurate characterization?
No. I mean, I really did feel that the cutting cycle was something that was underappreciated. I do think that the tailwinds globally is pretty significant. So, I've liked stocks for the better part of the summer.
Okay, so you've been bullish for a while, and that's what a lot of people have been saying. They're getting more bullish as the cutting cycle goes on. Maybe you've always been this bullish. People are saying get out of cash. It is the time to start going into other assets, into stocks, into longer-term bonds. Yesterday, we got data from ICI showing the biggest weekly inflow into money market funds. Jerome Schneider yesterday of PIMCO is telling us this is not really going to be the best place to be. It is actually accelerating the flows into these asset classes. $6.4 trillion now in money market funds. How do you explain the fact that people are still rushing to cash at a time where you're hearing the increasing cries to get out?
Yeah, you know what? We were having that exact same discussion on the desk yesterday. There are a lot of things that don't necessarily package well in terms of the flows and liquidity. I do think it speaks to the amount of liquidity that remains in the system, which ultimately is supportive until we really start to worry about liquidity, if you will. At the same time that's happening, we've got this Treasury conference that's going on at the New York Fed where they're talking about thinking what the liquidity situation will look like as QT kind of goes on. So for the moment, it is a tailwind. There is a lot of liquidity in the system. I think it speaks to the growth that we have in the U.S. and that potentially either supports retail and or supports the market. But QT will continue to operate in the background given that there's so much liquidity out there. And we do need to think through into the second half of 2025, which feels like a lifetime away, when maybe all of these tailwinds we have really start to die down.
2025, I think we've got to talk about the policy anxiety around the election. Marvin, do you think we can avoid that kind of gap lower in the equity market as we anticipate what may or may not happen November 5th?
I mean, you know what? There's so much that's going to happen in early November. Certainly the elections, hoping that we actually have an answer, if you will, after the elections. The Fed is that week also. The risk that I would look at in terms of top priority to getting a little bit lesser. Number one is whether or not we can call who the president is comfortably. If we can't, that is an absolute risk premium that the market needs to absorb. In terms of policy itself, there's going to be a knee-jerk reaction where Democrats are viewed less cooperative to the markets, if you will. But policy itself that gets put in place, I think we need to figure out who Congress is and what they can actually get done. If anything, really the deficit discussion remains top and center, however, as we go through this, which really formulates how you want to look at longer Treasury yields as we kind of go into the end of the year.
Beyond the bond market, though, Marvin, I think this raises really important questions about the character of the current rally. We've seen China absolutely rip this week. How vulnerable would it be, this rally, to a Trump presidency come November?
Oh, for sure. Again, I do think that a lot of what we're seeing in China is market supportive, but not necessarily economically supportive. We've had head fakes before. It takes the real economy in China getting firm footing to really justify the kind of rally that we've been seeing.
Marvin, enjoyed this. Thank you, sir. As always, Marvin Lowe there of State Street. Goldman Sachs, Kristen Muller-Glissman, this line. Bullish U.S. equity positioning and optimism might be tested by elevated policy uncertainty. What's ripping this week? China. What could test that? The US election.
Especially if you end up with a real protectionist type of policy that requires a real nationalistic response, which is the reason why some people were surprised that this really did come out when it did. It strikes me there are three big questions emerging from this week. How far are policy officials willing to go? How much does this affect the real economy? And how strong or weak is the actual economy right now? That's true of China, and that's true of the United States.
Right now, things are all good. Michael Hartnett, Bank of America, called it a bubble dream. The Fed is slashing, oil is crashing, China's inflating. The world stock market cap is set to surpass the high back in October 2021. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira Hackers. Hey, Yahira.
Hi, John. Shares of Costco are falling in the pre-market, down more than 1%, even though the company reported better than expected profit in the fourth quarter. The retailer said shopper traffic during the quarter increased in the U.S. compared to last year, but visitors spent slightly less per trip. Costco has had quite the run this year. As you can see, shares are up nearly 37% so far. Meanwhile, Intel apparently turned down ARM Holdings when the company asked about buying a unit of the company. Bloomberg has learned ARM approached Intel about buying the struggling chipmaker's product division. Intel's response, it's not for sale. Intel was once the world's largest chip maker, but has become the target of takeover speculation since a rapid deterioration of its business this year. Meanwhile, Hurricane Helene made landfall on the western coast of Florida last night as a Category 4 storm with maximum sustained winds of 140 miles per hour. Power Outage US reported that over 1.3 million homes and businesses are without power across the southeast. The hurricane's massive size means it's likely to bring torrential rain and flooding to cities hundreds of miles away, including Atlanta and Asheville, North Carolina. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next on the program, domestic divisions over Ukraine.
There are some in my country who would instead force Ukraine to give up large parts of its sovereign territory. We will continue to provide the security assistance Ukraine needs to succeed on the battlefield.
We'll get to those divisions up next on the program, live from New York City this morning. Good morning.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
US equities just off all-time highs as the rally continues worldwide. Equity futures negative here by 0.06% in the bond market, just about unchanged. Your 10-year, 378.67. Under surveillance this morning, domestic divisions over Ukraine.
The United States supports Ukraine not out of charity, but because it is in our strategic interest. There are some in my country who would instead force Ukraine to give up large parts of its sovereign territory, who would demand that Ukraine accept neutrality. We will continue to provide the security assistance Ukraine needs to succeed on the battlefield.
So here's the latest this morning. Kamala Harris pledging full support for Ukraine following President Biden's announcement of an $8 billion aid package, drawing a contrast with Donald Trump, as the former president suggests Ukraine should have offered concessions to Russian President Vladimir Putin. Joining us now is Bloomberg's Greg Corley. Greg, let's get to this. The meeting later on today and the tension between the Ukrainian leader and the former president of the United States.
Yeah, this meeting is about 3.5 hours from now at Trump Tower in New York. And it comes after a week in which, obviously, we have world leaders coming to New York for the General Assembly. Zelensky also taking the opportunity to engage in a little bit of domestic politics, going to Pennsylvania, a key swing state, perhaps the key swing state in this presidential election, going to Scranton, where they build ammunition for the Ukrainian war effort. Donald Trump took that as a personal offense. He's got his allies in Congress now opening investigations into whether that was proper. And so this is a very tense relationship. Trump has accused the Ukrainian president of being untoward toward him. And so there's going to have to be some de-escalation here. Zelensky knows there's probably a coin's flip chance of either one of these two people, Kamala Harris or Donald Trump, being the next president of the United States, and he's got to work the relationship no matter who gets elected on November 5th.
Greg, it almost feels like Zelensky is not reading the same polls you and I are reading. And the issue is not just with the Trump camp. How much does this hurt Ukraine's chances with Republicans in Congress that regardless of if Trump wins or not, they are going to need those Republicans' support to continue the aid flow?
Yeah, and that's exactly why you see these world leaders, whether it be Zelensky, certainly Benjamin Netanyahu, being very sophisticated in how they play the domestic U.S. politics here. And they usually try to walk this tightrope of trying to cobble together a bipartisan consensus. That bipartisan consensus has fractured over Ukraine. This Republican Party, post-Trump, is a lot more isolationist, a lot more Eurosceptical than it used to be. And so he's got his work cut out for him if he's going to earn even those more traditional Republicans, not to mention the J.D. Vances of the world, Trump's running mate, who is perhaps the premier Ukraine skeptic in Congress right now.
Which Zelensky told the New Yorker he is an individual that he finds too radical, unnerving, again, the Trump campaign. But we just have a new Bloomberg poll out, Gregory, which I know you pay a lot of attention to. You read all the responses. How much is foreign policy actually landing with the electorate?
Foreign policy tends to rank lower on the list of concerns of U.S. voters when you just sort of ask them to list their issues. But on each of these foreign policy issues, if you ask about China, if you ask about Ukraine, if you ask about the Israel-Hamas conflict, which of course we know is now escalating to another front with Hezbollah, voters tend to trust Trump over Harris on every one of those. Again, sort of reflecting the more isolationist mood that you have here in the country. And so it is something that, look, Harris, as the incumbent vice president, doesn't have the same sort of room to kind of politic on this. She is wedded to the Biden doctrine on each one of these fronts. And so that gives Trump sort of free rein to be critical of U.S. policy on this and to sort of look for votes there.
It's interesting this is all coming at the UN General Assembly week, where suddenly there are all these world leaders, in particular from Europe, that Ukraine very much views as their allies. How much are they refraining from making some of the statements that Volodymyr Zelensky is making in order to kind of hedge their bets? Because there's a real razor edge kind of election here taking place in the U.S.
Yeah, it's a very, very difficult relationship to manage when you don't know who the next president of the United States is going to be. You see Western officials, Keir Starmer now, meeting with former President Trump over lunch, trying to find some common ground, even though those two men are very far apart. This is a Western world that is grappling with the prospect of Donald Trump returning, and they're all sort of befuddled and trying to figure out where they stand. They survived the first 4 years of Trump, and how that really disrupted some of the key underpinnings of the post-war world order with NATO and the multilateralism there. Now, in an even more perilous environment, given the Russian war, given what's happening in the Middle East, looking towards what a Trump Doctrine 2.0 might look like.
Anne-Marie was talking about the new poll that just dropped from Morningstar and Bloomberg showing that Kamala Harris is having a slight, tiny lead in a bunch of these swing states. Just how difficult are some of the polls to read, and how sort of muddied has the water become after there's a real question about likely voters and the ones who are most likely to come out, to turn out, versus those who just have a preference but aren't really at play?
Yeah, so obviously there's a lot of criticism about public polling, and it's a very crowded picture. You got a lot of polls out there and some question about how to read them. Polls are actually pretty good. What's changed in the past few election cycles is that our elections are just very, very close. And so we're talking about just points, maybe even fractions of a points of difference. This latest Bloomberg News Morning Consult poll that we just published last night of the 7 key swing states most likely to decide this election really shows us the race at a razor's edge. Kamala Harris is at least tied or leading in all 7 of these states. But again, these are all within the margin of error. As you point out, it depends on which one of these people that we surveyed actually shows up to vote. So we're starting to look at likely voters. In this particular month, Vice President Harris does do better among likely voters than she does among registered voters, but that's not a given. And so, look, this is still anyone's race. And we have one more Morning Consult poll that we do with Bloomberg News next month, just before the election, and we'll see where we are there. But ever since Harris got in this race, it has been a virtual deadlock.
Looking forward to the coverage through the next month. Greg, appreciate your time. Gregory Cordy there. Out of the nation's capital, the #1 issue in this election has been for a long time, it often is, the economy. The gap between Donald Trump and whoever he's running against has been this wide for a while. It's getting closer and closer on that issue.
Well, which is interesting is Gregory Cordy saying basically Harris has been able to tighten the race. When you look at the #1 priority of voters, it's the economy. When it was Joe Biden early July, it was a 14-point gap. Then later in July, when Harris entered, 8-point gap. Now it's at a 4-point gap on the top issue. So she is really chipping away at his lead when it comes to the #1 issue, but the trust still remains in his favor.
You can see where the momentum is. I'm pleased we've brought up the Ukrainian president as well. A lot of people have celebrated his approach to diplomacy, and foreign policy is really, really hard, but I don't think you can overstate how badly they have done this week. If you believe this is a coin flip, when it comes to November 5th, then this approach isn't the right one.
They fumbled the approach when it comes to the Trump campaign, unnerving them with this interview, then going to the swing state of Pennsylvania, getting a tour by the most probably beloved Democrat in the party right now, Governor Shapiro, who's loved in Pennsylvania. So then you have Speaker Johnson coming out and saying, actually, this isn't fair. Your ambassador needs to go. It's a different tone than he took with me in July. Felt like he really wanted to talk to Donald Trump, and now it just feels like he's snubbing him.
We'll see how things change later on this afternoon. Coming up on this program, Bloomberg's David Gura. As New York City Mayor Eric Adams prepares to appear in court later on today, facing bribery charges, wire fraud, and taking illegal campaign donations. That conversation up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Heading towards a third week of gains on the S&P 500, a lift throughout the week. Right now on equity futures, pulling back just a touch on the S&P 500, down about 0.1%. On the Nasdaq 100, we're down 0.2%. The rally this week has been absolutely phenomenal. On the week, the CSI 300, we're talking about gains of almost 16% at the single name level. The likes of Alibaba are up close to 20% in a single week. These are huge moves. I think Freeport here in the United States up by something like 17% so far this week. Rio up 10%. BHP up 11%. It's the miners, it's the luxury players, it's anything connected to China.
Invesco's David Chow saying this: FOMO is running high for investors as Chinese equities have moved close to 10% in the past 3 days. Based on historical valuation, we think Chinese stocks have another 20% runway to go. Basically, there was a wave of cheering unleashed by the Politburo as they say, we need to get the economy in a better shape. Let's get going. Let's cut rates. Let's give some stimulus to poorer families ahead of the national holiday. And frankly, it's helping markets a lot. The question, will it trickle down to the economy?
I mentioned this from Michael Hartner earlier this morning over at Bank of America. A bubble dream. The Fed is slashing. Oil is crashing. China is inflating, which raises the question, why aren't bond yields higher? And we'll explore that throughout this morning. Let's check out the bond market together. Switch up the board, turn a page and get to the bond market story. The 2-year, 362. The 10-year down a single basis point, 378.67. Last week, the 2-year was up by not even a basis point. This week, it's virtually unchanged all over again. I get that the front end is anchored. What do you do with a 10-year yield, given the news flow of the past week?
I have no idea, especially because yesterday, talk about revisions, talk about new data. We got data out of the U.S. government showing that the U.S. emerged from the pandemic a lot stronger than previously expected, with the GDP adjusted for inflation upgraded to about 5.5% from 5.1% in the 3 years, and the savings rate actually substantially higher than we previously thought. So if you think that people have plenty more money to spend, and you think that the economy actually went in and came out of the pandemic in a better place, why wouldn't you assume that inflation would ultimately be stickier because this wasn't as restrictive of a rate as people previously thought? In other words, I have no clue. I mean, honestly, this to me is the trade.
Jobless claims, 4-month low. It's been a big story so far this week. Let's turn the page and get to foreign exchange. Two currency pairs. I want to start with the euro. This from Subhadra Rajappa of SocGen. Racing to ease, and the race is on over at the ECB. Inflation in France, inflation in Spain, plunging below 2%, and the euro down to 111.65. Does this tee us up for a rate cut at the ECB next month?
The market collectively says, yes, it is. It is absolutely going to tee the ECB up, given that now we have an 80% chance priced in. Why wouldn't they go? I was asking this before. I can't find the argument not to cut rates for an ECB that is facing disinflation that is greater than they thought previously and more weakness than they realized. That to me seems like a perfect recipe.
There was a great quote out on Twitter, X, just yesterday. It came from Marc-Andre Fonga, and he said, the Fed could cut rates further, the ECB should cut rates further. There's a big difference. I like that framework.
If you believe that this is a single mandate central bank focused squarely on inflation, where is the argument right now to not cut rates? That, I think, will be really interesting at a time where it is more political, especially with a fractured set of countries. That said, Where is the objection going to come from? Germany? Really? I mean, is that really the one that is going to come up and say, actually, we need to protect the euro and keep the strength and keep rates where they are?
With the economy basically in recession right now.
Correct.
In the largest economy in Europe. Speaking of politics, let's talk about Japan. Dollar yen down to 143. This is a much stronger Japanese yen. That currency pair dropping back by a little more than 1 full percentage point. 143 on dollar yen. Japan's ruling party picking a new leader, and that new leader is essentially endorsing higher rates over at the BOJ.
So I wouldn't think hike rates as well, given the fact that that really was what people were waiting for. Key question will be, how much does that hinge on what the Federal Reserve does? Because at a certain point, they want to get the yen stronger. They don't want to miss the window of opportunity. So do they get a chance to strengthen the yen even more in a more constructive way if they hike now at the same time that the Fed is cutting? Basically, this is a global easing cycle that has given the Japanese authorities the chance to normalize in a way that nobody thought that they could without disrupting global order.
And because of that move, Japanese stocks missing out on the rally. Under surveillance this morning, a top story for you. Israeli Prime Minister Benjamin Netanyahu agreeing to hold talks about a ceasefire in Lebanon. The US-led proposal is seen as a last-ditch attempt to prevent the conflict from escalating further.
So what Netanyahu said yesterday at the UN, then what his office put out on X and Facebook in English is very different. It seems that Netanyahu's under a tremendous amount of pressure. We know that Ron Dermer met with individuals from the Biden administration like Brett McGurk and Amos Hochstein here on the sidelines of the UN. But this is what the statement was from the office. Israel shares the aims of the U.S.-led initiative of enabling people along our northern border to return safely. Basically, we share the aims of this potential 3-week ceasefire. Very different than what he actually said at the United Nations. So it remains to be seen, is this a flip-flop? Or are the Israelis really on board with potentially this ceasefire?
When you talk to officials in the U.S. government who have talked with Netanyahu, they say it really depends on which Netanyahu you get, depending on which day you speak to him and what he is going to say. Unclear exactly where is going to go. It's more interesting to me, based on the fact that there is a lot of flip-flopping going on, is that Iran has not gotten involved in terms of directly fighting Israel. And that is notable. It isn't trying to escalate the conflict and back up Hezbollah. It kind of shows the reluctance for a lot of players to get more entrenched in this just now without trying a couple of levers.
Would you say, though, that this is a real shift in the stance, a real softening from the Israeli leader?
For now. Maybe.
You're questioning whether it sticks?
There is an ultimate feeling that they want to get people back to live comfortably in the north of the border. How do you do that? How do you achieve some sort of buffer to prevent an October 7th from happening? How do you end up with so much anger and saying, why do we have, missiles pointing at us? At the same time, how much appetite is there to really make a ground operation after being in Gaza as well? Maybe it's a shift in stance, but as we heard yesterday from our colleague in Israel, this is a bellicose nation right now that wants to fight back.
It really annoyed the White House. I mean, Admiral Kirby keeps his cool. This was what he said yesterday. I don't know why Netanyahu said what he said, and I don't know what his considerations were, whether they were political or operational. Ask him why he said that. They're annoyed.
That's a real drama in the Middle East. Let's get to another drama. I've called this a soap opera in European banking. Commerzbank said for his first meeting with the Italian banking giant Unicredit later on today, with talks ramping up for a potential takeover. Commerzbank pledging higher profits and shareholder payouts despite the German government's opposition to the deal.
So basically, everyone's saying probably this is a deal that's going to get done. My favorite aspect of this is this basically calling the German authorities' hands and saying, you cannot like it, but it's going to go through. You cannot like how they did this, but guess what? Everybody else thinks that it's probably going to be the best thing for them. Is this basically the path of travel for consolidation in a euro region that's highly politicized, but ultimately one that needs to really have tie-ups in order to continue with health?
Giorgia Meloni, Olaf Scholz had a call, and apparently this was not part of it, which I find interesting because we heard from the Italian foreign minister along the sidelines of the UN saying this: Europe, there's a free market. I don't understand why when someone comes to buy in Italy, they say that we're in the European system. But then if Italy buys, it is no longer a single market. There is this double standard that the Italians feel right now, and it's out in front with this deal.
I think if any of us had the opportunity to speak with German officials, you will later, I would show them a chart going up and to the right of Commerzbank. It's up another 5% this week. That should be case closed. The stock is higher. Shareholders are not unsettled by this at all.
Well, maybe the shareholders that are the German government are unsettled, so they're talking for themselves. Question is whether they can actually prove some sustainable way that they are arguing for on their own front to try to support some of the landest banks and some of the national champions and keep them thriving.
I imagine the foreign minister will tell me, Annalena Baerbock, that this was the finance ministry's fault, or potentially she'll say you have to go to the finance ministry for questions about that. Sleepwalking into basically what they did not realize was UniCredit buying up all these shares. But what is fascinating is that the finance ministry is held, because, you know, it's a coalition government.
Sure.
It's held by the pro-business, pro-capitalist party. And they're also on board with saying they don't want this to happen.
You could write a book on the last decade on German officials sleepwalking into crisis after crisis that everyone's talking about over and over again, repeatedly. And this is another one they've just kind of stumbled into and are trying to work out what to do next. Let's get some polling out of the United States. New polling from Bloomberg and Morning Consult showing Kamala Harris taking a razor-thin lead over Donald Trump. Harris making gains across 6 of 7 swing states and closing the gap with Trump on who voters trust more on the economy.
It's worth going through how much he's able to close that gap, and you can see it on that chart there. So Trump's advantage in the economy right now is only 4 percentage points. It was 6 points in August, 8 points in July. That's when Harris entered the race. Before Harris at the top of the ticket, Trump was leading a 14-point advantage. That's why at the RNC they were celebrating this as a coronation, starting picking out who was winning, who was going to get what cabinet seats, because they felt that the economy is the #1 issue time and time again for this electorate, and that Trump had such a huge advantage. So she's not winning just yet on the full trust of the economy, but she is certainly edging on that advantage.
And all Democrats are distancing themselves from this guy. New York City Mayor Eric Adams due in court later on today. Adams facing charges of corruption and taking illegal campaign donations. Federal prosecutors accusing Adams of taking improper benefits for nearly a decade. Adams is expected to plead not guilty while vowing to stay in office. He's later set because he transfers through Istanbul. It's Bloomberg's David Gura. David, good morning. Allegedly. Some of these allegations say they're shocking.
Yes, this is a 50-plus page indictment, and as is the case with a lot of indictments from the Southern District of New York, tells a great story with illustrations. I mean, there are pictures here of hotel rooms he stayed at the St. Regis in Istanbul, the Cosmopolitan Suite and the Bentley Suite. And so, as you say, this went on for more than a decade. It preceded his mayoralty. He was the Brooklyn Borough president and developed this relationship with officials in Turkey in both the private sector and the public sector, according to these allegations. And as a result of that, got a lot of upgrades on Turkish Airlines, got a lot of hotel room stays, and in so doing, had a relationship where the Turkish government could allegedly lean on him to do some things that it wanted to do here in New York.
John alluded to the lack of support that this mayor has right now to stay in the office. We know that Governor Hochul has come out and say, I'm going to look at my options. I hope he chooses an appropriate path. It sounds a little bit like Nancy Pelosi in the interview about Joe Biden when she was talking about whether he should continue the presidency. How much is there a growing momentum for him to step down? And if he doesn't, what is going to happen given the groundswell of anger against him?
So the statement that you're talking about is an extraordinary one in many ways. And so she, of course, nods to the fact that nothing's been proven here. He's innocent until proven guilty. But there is this focus on sort of what she's going to be doing in the coming days and what he's going to be doing in the coming days. But what stood out to me is this line from that statement: New Yorkers deserve to know that their municipal government is working effectively, ethically, and in the best interests of the people. Eric Adams, standing side by side with his attorney, who is also Elon Musk's attorney, a very prominent defense attorney, making the case that this is all fabricated, these are false claims, and saying he's going to fight through this because he's been fighting through the specter of these allegations for many months now. Look, you look at how many people in his administration have left in recent days and recent weeks. I think that there is a really vital question now in this city. Does this administration have the people, does it have the brain power and capacity to continue to run the city? And I think that's going to be something that sways Democrats, not just here in the city, but in the state and nationally as well.
Just to take that a step further, there's a question about if you broaden out the entire web of people who are involved in this, how big is this? There have been a number of people who have resigned from a number of different departments. There are potential allegations of changed outcomes in specific industries. I'm thinking of the fire department and an investigation into the Istanbul consulate. How far-reaching is this at a time where people are questioning the efficacy of the New York City government?
Look, we don't know how broad it's going to be, and of course there could be superseding indictments. In the New York Times, which broke the story of the existence of the indictment, is out this morning saying that there are subpoenas looking at his relationship with other countries as well. So we'll see how it broadens, if it does, in the coming days. But you look at what ushered him into power in the city back in 2021, and he assembled this broad coalition. That's what he said so proudly of people across the city. He managed to do that through the relationships that he had. It's his style of politics. So we'll see how broad that is, but you're right. I mean, it encompasses a lot of agencies within New York City government. And just looking at the police department, we've had 2 commissioners who have resigned as a result of these investigations, and now a 3rd one who's there on an interim basis. Had his papers searched a few days ago as well. So it just continues to build and pile on.
David, I don't know if this is a case of Brooklyn versus Bronx, Mets versus Yankees, but Hakeem Jeffries versus Alexandria Ocasio-Cortez, very different. He's coming out and he's saying Adams is entitled to presumption of innocence. He's not taking that fine line of potentially this individual needs to step back so the city can actually be governed.
Yeah, his tertiary statement, and I think back on Hakeem Jeffries before he was kind of ushered into leadership in the House, rumored to be somebody who could be the mayor of the city someday. That might have been something that he was aspiring to be. But you're right. These are 2 people who've known each other for a very long time. Eric Adams, when he's Brooklyn Borough President. Hakeem Jeffries, of course, representative from the same borough. It will be interesting for me to follow sort of what we hear from Chuck Schumer when, in fact, we do. Another Brooklynite in a huge position of prominence in government as well.
He was asked in Congress yesterday and quickly took out his phone and said, emergency.
Had the flip phone, had to walk away.
Yeah. You know, he always does that. There's always a phone call for Chuck Schumer when, you know, it's useful for him. So what do we expect today from Eric Adams?
So he and Alex Spiro will be at the court on Pearl Street in New York for a hearing, and we'll sort of get a sense there in more detail of sort of what goes beyond these indictments and what the path forward is here as well. But he will be making that a court appearance, and you know, I wouldn't call it voluntary, but he'll be making his way of his own volition to the courthouse downtown.
Do we know if Andrew Cuomo's gearing up for a comeback?
This is widely rumored to be the case, and while I have no reporting myself on that, it is something we've heard widely that he's interested in doing, and he sees this as an opportunity. So, I mean, just going back to what you said about Kathy Hochul, the governor, she has this amazing latitude to suspend the mayor if she wants to and remove him as well. That would lead to, you know, the elevation of the public advocate in the city. If we had a special election, I think that there is a former governor who would be taking a close look at his prospects.
I'm not sure how she's going to feel about that.
Yeah.
Wow. You're honestly, I'm just thinking, do we have another bench? I'm just wondering, can we get some people without, I don't know, some hair on them coming into the office?
He is still running for re-election. Eric Adams is, and so there are comptrollers past and present who are running against him. I mean, there is a kind of primary that's shaping up here in the city. So there is a bench. There are people who are interested in the position beyond members of the Cuomo family.
Okay. Good to see you.
Good to see you. So have a good weekend.
You too. David Gura of Bloomberg on the latest. What a drama. Let's give an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. A new warning out for its 737 aircraft. The National Transportation Safety Board said a faulty component on some planes could cause rudder systems to jam. According to the FAA, United Airlines was the only U.S. airline that had the faulty parts. While the agency does not believe the airline is still using the affected parts, it is still urging Boeing and the FAA to address the issue. Meanwhile, Dell is calling its salespeople back to the office 5 days a week. In a memo to employees, executives wrote, quote, "We know situations will arise when you need to work remotely, but working remotely should be the exception rather than routine." A previous memo widely reported earlier this year told Dell employees they would only be eligible for promotions if they showed up to the office. The new return to office policy for Dell starts next week. And as foreign leaders gather in New York this week for the UN General Assembly, our own Anne-Marie sat down with the French foreign minister to discuss a potential Trump administration and how France would react to his proposed tariffs.
We believe that international trade is a source of welfare for our co-citizens. But we also believe that we need to be firm on reciprocity, and we need to set a level playing field with all our partners. And so I hope that we will not see the beginning of trade wars across the globe, but especially between the US and Europe.
Later today, Anne-Marie will sit down with German Foreign Minister Annalena Baerbock. You don't want to miss that. That's your Bloomberg Brief. John?
Yahara, thank you. Must watch TV. One question. Are you walking in with a chart of Commerce Bank? Is this how this conversation begins?
Hey, you know what? Maybe I will bring props. I think that's what I'll do. I'll bring props.
Props for this interview?
Yeah, respond to this chart. That's the question.
With like a stick and stuff? Okay, looking forward to that. Up next on the program, a market share war brewing in the oil market.
Whether or not there's a $100 price target, I think we'd be somewhat skeptical about that as an explicit thing to focus on. The real problem from Saudi Arabia's perspective is you're going to be in a scenario where non-OPEC supply is going to grow faster than trend demand growth.
Amrita Sen of Energy Aspects up next. You're watching Bloomberg TV.
Artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Following the 42nd record high of the year so far, your equity market pulling back by 0.1% on the S&P 500. Yields lower by a single basis point. The 10-year 378.67. In the oil market, things bouncing just a little bit, but still a 67 handle on WTI, 67.93. Under surveillance this morning, a market share war brewing in the oil market.
Whether or not there's a $100 price target, I think we'd be somewhat skeptical about that as an explicit thing to focus on. But if we step back and look at the underlying structural dynamic in the market, the real problem from Saudi Arabia's perspective is that at any price, not even close to their fiscal break-even, any price around where they might target it, you're going to be in a scenario where non-OPEC supply is going to grow faster than trend demand growth.
So here's the latest. Crude oil heading towards a deep weekly decline as more investors bet Saudi Arabia will increase output. The Financial Times reporting this week Saudi Arabia is ready to abandon its unofficial price target of $100 a barrel for crude as it prepares to increase output in a sign that the kingdom is resigned to a period of lower oil prices. Joining us now, Amrita Sen of Energy Aspects. Amrita, we all remember November 2014. Is a repeat brewing?
I think you know this better than I do. I think some of those words used in the headline were a bit misleading. I don't think anybody, in particularly Saudi Arabia, have ever said anything about a $100 target. And I do think the concept of market share, or the way it was written, is taken out of context. Look, what Prince Abdulaziz and the countries who have come out with the voluntary cuts have said very clearly is that A, they're voluntary, so they are going to be unwound, and they are hoping that the compensation cuts that are supposed to be coming through will be able to at least partially offset the increase in production. So this isn't about flooding the market. And we put out a note yesterday saying that the focus of OPEC Plus continues to remain on inventories, to make sure that the inventories remain below the 5-year average. And how they manage that between them in terms of who's cutting and who's bringing back production is almost irrelevant, at least from their point of view, because the focus will still be for the group, let's make sure inventories don't build, let's make sure the curve is in backwardation. And I think that's the thing somehow the market has forgotten. Of course, the weakness in demand has made it challenging for them, there's no doubt about that. And I'm not saying that next year miraculously demand is going to be much higher. Having said that, some green shoots, some of the stimulus that China's doing now and the Fed rate cuts will help. But I also think we need to put it into context. I think yesterday's article, of course, everybody's talking about it. I don't think there's a lot of truth to that headline that was talked about. The increase in production, yes, it's planned from December. We have that in our numbers as well, and they've communicated that. So it's not a shift in strategy.
Wait, Amrita, are you saying that they're not going after market share, basically, and they are still looking at supporting prices?
I don't think the two are necessarily linked. I think the focus is keeping the market in balance, allowing inventories to remain, well, making sure inventories do not build. I really do believe that what happened in 2020 when inventories ballooned so much, it took them a year to bring prices and the market back in line, is something they remember very, very well. So they definitely want to avoid that. In the context of market share, I actually believe this very firmly. In the West, we look at market share quite differently. Look at what Saudi Aramco has been doing. They are going and buying refineries in Asia, buying stakes in refineries in China. That is market share. They are guaranteeing market share for the longer term. When you basically own 20, 50, or 100% of a refinery, they have to buy your crude. And I think they have been doing that as a strategy and systematically. So I don't think they're as focused on kind of quote-unquote market share as we think about it. Oh, U.S. is gaining some barrels versus, Saudi Arabia and so on. The focus, however, is on compliance. Those who haven't been complying, Iraq, Kazakhstan, for instance, Russia has been complying more now. It's more about the other 8 that are complying and have done the voluntary cuts. It shouldn't be a free rider problem that everybody else is taking advantage of them. That's where the debate is. It's not about we want to win back market share. It's about saying we don't want to be taken advantage of.
Okay, but the market has been through price wars before with OPEC+. Javier Blas a few weeks ago was talking about the fact that we cannot, disregard or discard the fact that that could happen. If we were to see a price war, who is going to hurt the most?
Well, I think first and foremost, let's be very clear. Even the FT article doesn't talk about anybody surging production. I know the very last paragraph mentioned it, but what OPEC Plus are talking about is the gradual incremental production coming back. Again, whether you believe the compensation cuts or not, I'll leave that to one side, but it is very gradual. Market share by definition is what happened in 2020, that everybody, surges production, like Saudi Arabia went to 12 million barrels per day, Russia was increasing production. Nobody's talking about that. So I don't think we should be using that phrase personally. If prices go down, even at current prices, a lot of countries are hurting, including the U.S. We actually think there's downside risk to U.S. production next year as well. But even one of the key things that we continue to see this year, Brazil, massive underperformance. Other countries, even North Sea, massive underperformance. And by the way, the WTI strip and the Brent strip this year is still averaging above $80. Forget the price fall that we've had just now. So even $80 oil somehow doesn't seem to be high enough to actually bring production in places like Brazil. When we had $100 oil, of course, we saw that coming. So I think we need to be a little bit more realistic about the non-OPEC supplies talking about.
Amrita, we've got to leave it there. Amrita Sen of Energy Aspects pouring some cold water over that reporting in the last 24 hours. Crude is down by more than 5% this week.
Gasoline prices in the United States, $3.22. They've been coming down significantly. So whatever it is, seems like that's the stimulus people are looking for from Saudi Arabia.
Heading south. Coming up on the program, up next, we'll catch up with Sebastian Page of T. Rowe Price, former World Bank President David Malpass, Tom Steyer of Galvanize Climate Solutions, and Christina Hooper of Invesco. The second hour of Bloomberg Surveillance, just around the corner.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
You do have a broadening of the market.
Here's my outlook. We're going to have an incremental slowdown.
We should expect more surprises rather than things going the way that need to be perfectly done.
If you said to me, what do you think the risk of recession in the next 12 months is? 1 in 3? 30%, 35%?
A lot of the concern that's out there in the market, it's just not being priced in.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Going into the opening bow with futures pulling back by 0.1% on the S&P 500. Just a little bit softer here. In the equity market, your scores look like this. On the Nasdaq 100, down by 0.25%. On the Russell, the small caps up by 0.2%. Things look snoozy right now on the week, anything but. The CSI 300 absolutely flying this week. Bramo up by close to 16%.
Can we call it a bazooka? I guess that's what we're debating. How much are they actually pledging to truly support the Chinese economy? I'm talking about the Politburo. I'm also talking about the People's Bank of China, both of them coming out. It's almost like as if the Politburo gave the message to the central bank, all right, guys, so now it's time for you to do your part. And suddenly they started cutting rates more aggressively as well.
Just sit on the equity market and think about the gains so far this week. I did this a little bit earlier. Chinese tech, Alibaba up by something like 20% on the week. Look at European luxury. Pick out LVMH up by something like 18%. The miners, Freeport, Rio, BHP, all of these names just flying. Now, I raised the question earlier this morning. We've seen movies like this before. China comes out, says the right thing, does a little bit of the right thing at the same time, stocks rip. And then they fade and they roll over because it doesn't gain traction in the real economy. Is it different this time?
Well, this is the key debate right now. You have David Tepper from Appaloosa saying yesterday, basically, I thought that what the Fed did last week would lead to China easing, and I didn't know that they were going to bring out the big guns the way they did. He's buying everything China. But then the China Beige Books, Shahzad Kazi came out, and he basically said the major takeaway from this week's announcement is the widening chasm between assets and the macro economy. He doesn't buy it because ultimately this is putting floor under some asset prices. It's not necessarily doing more than that.
But when it comes to asset prices, if you're not bullish, you're turning bullish pretty quickly. Morgan Stanley this morning seeing another 10% upside in the CSI 300 when it comes to these Chinese stocks in the short term. I have to say, Bernard Arnault must have been looking at us coming out of China, breathing a sigh of relief. This is huge for Europe. But is it short-lived? I caught up with the French foreign minister yesterday, and they're talking about reciprocity, potentially for tit-for-tat tariffs, and they are the ones that are going to be stuck in the middle between Beijing and Washington.
How insulated is this rally from what may or may not happen on November 5th?
That ultimately is really a good question at a time, especially where there's been such a focus on Chinese policy and such a different focus depending on whether it's Kamala Harris or Donald Trump. And that, I think, is what a lot of people are looking at. At the same time, how do you trade something you don't understand? And typically, don't fight the Fed, don't fight the PBOC, don't fight the Politburo. That seems to be the theme that we feel in markets this morning.
We said earlier this week, you've got to respect the difference between what we're all anxious about and what people are excited about in the market. What we're anxious about, the prospect of a downturn in the economy, a soft jobless claims report, payrolls next Friday. What we're excited about in the market, a re-acceleration of growth, an easing cycle kicking off worldwide.
Both. And ultimately, this to me, the excitement can also be paired with worry. This to me, if you want to go there, if you want to be existential, the idea that the revised data from the U.S. economy showed that the U.S. economy was actually growing more quickly than people previously thought, that the savings rate was going up. The fact that you're not necessarily seeing the slowdown in certain aspects of the economy that people were counting on for inflation to keep coming down. Are we truly in a disinflationary nirvana, or is this something different that is a new regime? And ultimately, we don't have a finger on exactly where we are now, let alone where we're going.
We'll try and answer some of those questions this hour. Coming up on the programme, we'll catch up with Sebastian Page of T. Rowe Price on why he's optimistic on the economy. We'll speak to former World Bank President David Malpass on a more protectionist Washington, and Christina Hooper of Invesco on this week's massive rally out of China. We begin this hour with stocks close to all-time highs after posting the 42nd record of the year so far. Sebastian Page of T. Rowe Price looking for the rally to broaden. We're positioned for the market to broaden over the next 6 to 18 months. We're prepared to add to risk assets incrementally should stocks pull back over the next few months. Sebastian Page joins us now for more. Seb, it's good to see you. Welcome to the program.
Great to see you. Thank you.
If you're waking up this week to some of this price action and you're wondering, is my home bias a little bit too large? Do I need to look abroad and get out of America? What's the advice you're giving people?
I think you should consider broadening your exposure globally. We're roughly neutral between international and U.S. stocks. You know, we talk about high valuation. I think Lisa, you just hit the nail on the head with excitement coupled with worries. But if you look at valuations in the U.S., get 21 price-earnings ratio for the S&P 500, the average stock in the world is trading at 13, 14 price-earnings ratio on the forward earnings. That's actually the long-term average. So there's an opportunity to broaden international exposures.
Let's talk about where. You've got miners listed in London, luxury players listed in France. You've got the tech names that you can pick up here in the United States and over in China as well. Where do you want to be?
So we're actually long emerging markets. We like Japan, Europe a little bit less. I know you've been talking a lot about Germany and struggles there and how that's linked to China. And by the way, on China, it does look like a meaningful stimulus. But our analysts are writing research right now on our research platform, and they're saying, look, this is a short-term boost to confidence, but it's a different context. China is just structurally challenged for investing, with youth unemployment at 18%, with foreign direct investment having completely cratered, with a really difficult property market. Like, that doesn't change on a dime.
That said, the feeling that you're in this global easing cycle where even China's on board, and they're actually even injecting fiscal, and they're promising more, and they're getting people excited that maybe they're focusing more on the economy, just adds to this feeling that we're in a new regime once again, that there has been a seismic shift that now makes it really kind of, I don't know, for some people almost inexcusable not to go into risk, because basically central bankers are saying, please, by all means, we'll pave your path. Are you getting more than just simply aggressively neutral?
Yeah, look, add China to the case for the bulls. I said last time I was on, we're having massive debates in our asset allocation committee right now between the bulls and the bears. And someone told me I was being too long-winded, so I tried to make the bull case in 4 words. Can you make the bull case in 4 words, Jonathan? Basically, the bull case to me, in the simplest way possible.
Central banks are cutting.
That's a good one. But try, you know, rates down, earnings up. That's a very pragmatic bull case. The bear case, of course, to your point, excitement coupled with worry, is that the economy, the city economic surprises are negative for 5 months in a row. So economy down, valuations way up. I guess that was an extra word, way up. But so we are slightly overweight stocks. We want to add over the volatility that we expect during the fall incrementally. And I think it's good to talk about adding in the future now, because those decisions are hard to make in the moment. When stocks are down, it's just harder to buy, but we tend to do that, so we're preparing the groundwork for that.
This market doesn't agree with itself. It seems like there's a feeling of mispricing, because on one hand, earnings up, growth, everything's going great. Does it make sense for the rally to also be in the long end of the yield curve at the very same time that people are talking about a reacceleration in growth?
Yeah, look, even the probability of recession right now is a huge debate. I mean, if you look at things like manufacturing PMI, the yield curve, which we talk about a lot, and the rise in unemployment, 40 basis points over the last 12 months, I can show you statistically that based on these three scary bearish indicators, the statistical historical probability of recession is 92%. So that's scary. But if I add any kind of market pricing, stock returns or spreads, and the level of unemployment, which, by the way, unemployment is low by historical standards. Like the historical average is 5.5, 5.7. That's the historical average. If I add those two variables, run the same model, I go down to a probability of recession of 11%. And so you see this, like, depending on whether you're looking at green cells on your macro dashboard or red cells, and it's a little bit of a knife's edge right now. And that's why you're talking so much about claims and how they're going to matter over the next couple of weeks.
Is that what matters the most to you right now in this market? That kind of data?
Yeah, I think the employment data is really important. It is lagging in predicting recessions. Claims aren't as lagging as the rest of the data set. But ultimately, when you invest in stocks and think about your weight in stocks versus bonds, earnings really matter as well. And if you go back to my forward bull case, rates down, earnings up, that is a big part of why we're looking to add over the next few months.
What's the forward bear case to the individuals on your investment committee that are saying, hold on, we need to press pause?
We tend to be contrarian. 21 price earnings ratio on the S&P 500. The S&P is up 60% over the last 2 years. We don't like to buy stocks when they're that high. We're fully invested. Things are looking good. But this is not time for massive overweight.
Jobs crash, valuations high. I think that you could say that would be the forward.
Lisa's good at this game.
I mean, you could basically say that, right? Ultimately, what you're looking at, how much do you really understand the data that we're looking at as being accurate, given some of the backward revisions? I really was struck by yesterday's backward-looking revisions of GDP, showing it was substantially higher when we look at the 3 years following the pandemic. And you look at the savings rate, that was 2 percentage points above the previous estimate. This basically shows that consumers have a lot more money in their coffers, and maybe they haven't spent their savings. How reliable is the data that we're hinged on every week in this data dependency?
The data seems much less reliable than it used to be. It's the COVID normalization. I'm not an economist, but I look at all these revisions and I start doubting the survey methods, the measurement methods. But, it's just not that bad in the employment. However you want to look at it, it's trending in the wrong direction, but the levels of employment in this economy are still pretty good. And claims in the 200s, this is a robust economy.
I want to talk about the election and finish there. This note just dropped from Michael Purvis of Tallbacken. The real election risk is in December. The real election risk is not a blue or red sweep, but a narrow win by Harris, a win which becomes contested by Trump. How are you and the team thinking about the election?
Well, contested election would be a problem and disappointing. I think most investors on our platform would say that a divided outcome is probably most favorable for markets. I mean, this spread between potentially 15% corporate tax rate to 28% corporate tax rate, these outcomes could matter and they could generate volatility or massive tariffs, right? So we're going into an election where we should see market volatility. I know that's a bit trite to say, market volatility. We always have market volatility. But I think the divided outcome is the safest for market where you don't get any extreme policy shift.
It might be the safest for the markets, but what's your base case? Is gridlock your base case?
Yeah, I think so. And it speaks to the deficit, which I think we're kind of kicking the can down the road. I know it's a topic on Bloomberg Surveillance. You know, we're running massive, like recession-like deficits, 6% of GDP. And that will work, and you have fiscal stimulus in the system, which on its face is a good thing, but you're kicking the can down the road. And I know a lot of your guests talk about that, but it is going to be a long-term problem. But so, you know, in that context, I think we're okay, but you really need to watch the auctions.
Thank you. I appreciate that.
You've got a friend in Lisa, that's for sure. Sebastian, thank you, sir. Sebastian Page at T. Rowe Price, appreciate it. Equity futures on the S&P, we're down 1/10%. Let's give you an update on news elsewhere with a Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. UK Prime Minister Keir Starmer dined with Donald Trump for 2 hours last night. The two men discussed the long-standing friendship between their two nations and the importance of maintaining an enduring partnership. That's according to Starmer's office. While the British Premier had hoped to also meet with Kamala Harris on the visit, reporters traveling with him to New York were told that diary challenges prevented it. Meanwhile, shares of Moncler are rising in Milan, up 5% after LVMH said it was investing in the designer outerwear brand. As part of the deal, LVMH is buying a 10% stake in Double R, the investment vehicle controlled by Moncler CEO Remo Ruffini. LVMH will also get a seat on the Italian company's board. Moncler, which sells down jackets that can cost more than $6,000, has more than quadrupled its sales over the past decade to about $3.3 billion. Meanwhile, Peter Thiel is cashing in on Palantir. According to regulatory filings, the billionaire has sold almost $600 million of stock just this week. Thiel, who was a co-founder of Palantir, has now sold more than $1 billion of his stake this year. The filings do not disclose a reason for the sales, and Thiel has not responded to Bloomberg's request for comment. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, we'll catch up with the former World Bank President, David Malpass. That conversation just around the corner. Equity futures negative 0.1% from New York this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.